Hello and good afternoon. My name is Matthew McCoro. I'm excited to be here with each and every one of you. We're going to be talking about a unique method of identifying breakout opportunities in the market. Now we're going to be leveraging some time-tested concepts, and my goal is to help really simplify and bring a process that can help speed up your research time before you make a trade. Also go through some tips and tricks of how to identify some clear-cut ways to identify profit targets, different ways to leverage stop losses. At the same time, if you trade options, I'll show you some simple ways to pick different types of option chains and also be able to trade using different profit targets and stop losses all up front, all at one time. And so there's no longer having to babysit trades or watching P&L every single day, trying to make an emotional decision. We're going to make everything as objectively as possible, every decision that is. So if you've seen my presentations before, you know I like to really dig deep. I spend a lot of time teaching. I spend a lot of time on charts, answering live questions from you all. So I want to wish you first off a happy new year. Hope you're excited about the 2023 opportunities in the market. I know we're very close to a breakout. We're in a transition. Been quite choppy the first few days of the trading year, but everything's setting up for a nice breakout, and we're going to be going through that as well. Now at this point, let's just make sure everything's working properly with the audio and video. I want to make sure at this stage you should see a slide that says sound check. It has an example of what the control panel looks like on your end. You have audio controls, then you have the question section below. The question section is what we use. It is private, that is on purpose. I want to make sure that every one of you know that all of your information is private. No one can see your first name, your last name, your email addresses, nothing of that nature. We also do that to ensure that you have a room where you can fire away questions without worry about people jumping on your question. Unfortunately, in today's day and age, there are what I like to call trolls, right? They're just people that want to be negative. They want to jump on anybody and you know, try to point out any flaws or any weaknesses. So I don't mind doing that myself. I've been doing this a long time, since 2007. So I've hosted, at this point, it's got to be in the thousands of these events in the last 15 years. So I can definitely take any type of constructive criticism. But you know, for those in the room that are attendees, it's not pleasant. So we keep it locked down. All right. So at this point, what I want to do is just make sure that you can hear, you can see the slide. That's me sharing my screen, and then you should also see the webcam. I'm live with you. This is not pre-recorded. This is not a mock pre-recording. This is real, and I'm with you live. So if that's the case, just type me a quick note. Hey, Claude, good to see you. Vicky, Happy New Year to you. Thank you, Ruiz. Emma, we got Cayenne with us. I like that name. All right, perfect. So it looks like, I'm not going to go through everyone's name, but you get the gist. Everything's good to go. If I see one, I see all. That's not being all-knowing. I'm just simply saying, you know, if one person can hear me, then good percentage of the time everyone can. All right, good to see you, Timothy. Thank you. Thank you, Linda, as well. All right, so with that, let's set some of the expectation. What we're going to talk about today is combining, to me, two of the most important pieces of trading. Now, I offer a service. It's a trading signal service with live trading analysis, support, and teaching. That's the overarching way I support my traders. I've got hundreds of traders that follow me on a daily basis. But it's all based upon teaching, of coaching, of providing tools and resources. And you're going to see everything I have today. So this is actually a workshop. Here's a better way I like to describe an event like this, where I'm going to actually take you through my number one used strategy, which is using momentum paired with trend. Those two things together is the cornerstone of what makes the market tick. You know, we've all heard from an early age, you know, you buy low, you sell high. That is true. What's also true is that when you see big movements in the market, when you see a stock price jump 3, 4, 5, 10% in a day, that's based on one thing, and that is a large amount of transactions. It's a lot of activity. That's what momentum is born on. It's born on a lot of people, a lot of money jumping in and buying something. It also works the opposite. When you see a lot of people selling, you see the market basically fall off a cliff, right? You see that big old red day. That's because a lot of people are selling. In fact, more people are selling than there are buying. That's what creates the market to go down. Well, the opposite's true in an uptrend, right? When a bullish breakout occurs, there's a whole lot of buying happening. It's a buying frenzy, right? It's like going to Black Friday, right? We've all seen those videos. Maybe you've been a part of it. Maybe not fighting it. Maybe you saw it, right? Remember Black Friday when there was the first big Black Friday event? You know, you see the horror stories of, you know, watching it on Walmart, Target. All of a sudden, everyone's lined up at 4 a.m. waiting for the doors to open. There's a mad rush inside, right? That's a buying frenzy. Well, that happens in the markets. And so if you can actually identify and see it, be prepared for it, then wait to see if it actually breaks out, right? That's what I'm going to be talking about today. It's a catch philosophy, catch the trade, not chase the trade. It's two distinctly different approaches if you think about it. One is I see something, I'm going to go chase it, right? Think of a lion in the jungle, a lion in the safari desert, right? You're watching, maybe not the desert, but you get my point, right? You see a lion, and what happens? Well, the gazelle runs. Well, then what happens? Well, then that lion goes, that's my dinner. I'm going to go chase it down, okay? Now, the opposite scenario is when I go fishing. When I go fishing, I'm looking to catch something. I'm not that athletic where I'm going to go dive down and go spear fishing, okay? That is a caveat to what I'm going to say. But when I'm going fishing, my goal is to be at the right spot at the right time so I can catch the big fish, right? So that's the difference. Instead of me trying to run down and chase something that's already running, I want to find the best spot and be there on the right time. If I can do that, then I'm going to have a higher percentage of my days catching fish versus simply just driving around on my boat, right? Just cruising. So fishing to me is being at the right time, being at the right spot. That's when you catch the fish, right? That's what we're going to be talking about today. So to understand that and to see when that's going to take place, I'm going to show you how to combine momentum, identifying where is the money being traded, where is the energy, where's the excitement level, which is being interpreted by transactions. If you buy something, you want it. There's a distinct difference between me having a wish, having a dream about something. I spend a lot of time outside. I'm in Florida, just north of Orlando. I've got a couple acres. I'm an avid gardener, not in the sense of flowers, but I like to grow stuff I can eat. So there's some things I buy regularly, but there's things I want. It's like a wish list, right? I can talk about it, I can wish about it, I can dream about it, but I really am a buyer when I actually go buy it. When I go buy it, that's the ultimate transaction. Same thing in the markets. We can read all the different analyst reports, we can do all the research, we can read all the financials of a company, we can talk to our friends, our family, our neighbors, and we could talk about how amazing it would be to own Apple, how amazing it would be to own Tesla. But you're really not a buyer until you actually buy it. But that moment you buy it, that is the ultimate transaction. You've actually made the commitment. So that's what we're going to talk about today, is how do we navigate and weed all of that noise out and get right to the data. What is the most important piece of trading is transactions, buying and selling. That's what drives the market. So I'm going to be sharing that with you, and I want you, and I encourage you to ask questions. I'm going to give you a full layout of exactly how I run my charts. You can make this as active or as passive as you would like. Okay, so the process I'm going to share with you, you can do it where you have a few clicks of a button, you find trades, you make trades. Or if you really want to understand the concepts of what I teach beyond today, then I'll show you exactly how to do it step by step, how to expand trading around it. But it's all based upon this premise that I'm going to share with you now. If you haven't seen me before, I'm going to spend just a moment giving you a little bit more background on myself. I've been in this industry since 2007. For those that are of age to remember that time, that was the last great recession we had, started in 07, 08, 09. And so through that time, I actually was paid to learn how to trade because I worked at that time with one of the largest financial education and trading technology companies. I actually started my career doing exactly what I'm doing here. Ultimately, I moved up in the company to become the chief revenue officer, and in total, we ran about $150 million a year total in my career there. I left in 2018 after several years in that seat, about 3-4 years as the chief revenue officer. I was responsible for revenue, marketing, obviously sales, net P&L, right, profitability of the company. I was also responsible for customer service, the product teams, because the classic model of a company like mine is you create revenue by teaching. How do you teach? Well, forms of trading signals, education, could be newsletters. There's a whole range of suites of products that people like myself and companies like myself provide. If you have a certain amount of clients that you have, how do you grow your revenue? Well, you come up with a new product. I mean, that's one of the simplest ways to grow revenue. So you're constantly in a wheel, in a mouse wheel, working and grinding your creative team, product teams to say, guys, I need something else. I need something new. I need something new. Everybody already bought the other thing. We need something new. Now, this is insider information, but you could probably get a sense of your experiences working with companies, right? You buy one thing, it's the greatest thing on earth. Guess what? 2 months later, hey, here's the next greatest thing. Well, after so much time doing that, I also was working 10, 12 hours as an executive. I had 2 small children. I said, enough's enough. I can't, number one, keep doing this. I mean, I just feel like I'm robbing Paul to pay Peter. I mean, it's just, to me, it just wasn't a pleasant place to be. At the other token, I wanted to enjoy my life and be an active father. So I took about 6 months off in 2018. And at that point, I had such a love and passion for the markets because I basically spent my professional career teaching it, coaching on it, mentoring in it, creating programs and trading, of course. And I just said, look, if I'm going to get back in this industry, I'm going to do it a different way. So what you're seeing today is my version of a different way. It's where me and my team, we focus on teaching, empowerment. Yes, I give fish because people like to see how things work. They like to get signals that follow the same mantra, the same philosophy. But I also wanted to do it in a way that's cost effective. So you're going to see that later on. What you're going to see today does not cost you tens of thousands of dollars to join me. It doesn't cost you thousands of dollars to join. I keep it really low. And so the intent of that is because I prefer to work with more people than less people. I also rely a lot of you all to spread the word if you're happy. So I keep infrastructure down, we keep costs down. I've got a beautiful team of smart people, smarter than me, that know how to build great product, build great service without a huge price tag, okay? But the reason I say that is because I'm not here to tell you that tomorrow you're gonna see my other great way of trading. I've got one way I trade. How we leverage that depends upon if I'm trading options, if I'm gonna trade futures, if I'm gonna trade the stock outright. But the base of what I'm gonna share with you can be used across any type of trading you wanna use. Short-term timeframes, long-term timeframes. Could be buying a stock you can hold for years, or trying to buy a stock and get out on the same day. So the base concept you learn once. If you want to expand, there are so many ways to expand the base concept. And so that way, my traders don't have to learn 50 different ways to trade the market. The concept is universal, and that's what I'm going to share with you now. So if you have questions on my background, let me know. I'd be more than happy to answer more, but I like to be on the charts and teaching. So I'm going to go to the charts. I'm going to walk you through what I use, how it's set up. And then I'm going to take you through exactly how it works. And if you like it, obviously I'll be able to teach you more and really give you some more tips and resources so you can actually run this yourself. So think of this as a workshop. So if you have questions at any point in time, please let me know. I'm here to answer them. That's why I'm live. I don't like to do pre-recorded stuff. I don't like to do even that fake recording stuff. I like to be real, I like to be with you. That way we can be right in the moment, right in the market at the current time. And to me, I feel like that's a better experience, at least for me, and hopefully it is for you. So with that, I'm going to turn the camera off. I'll come back later, but at this point, I want the most real estate focused on the actual charts. So I'll be back with you on camera, but I'm going to be sticking with you as I transition into the charts. So remember, the concept here is simple and repeatable. That's what I'm going to be focusing on. So that way there's a consistent method of looking at a chart. Now, we're going to start, and to make this even more personal, number one, let me start here. But as I walk you through this next step, what I ask of you is to think right now. I'm going to take a pause for a second. I want you to just take a brief moment and I want you to think about the top 2 stocks. Could be ETFs. It could be, in fact, any financial instrument, any investable symbol. Could be stocks, futures, Forex, could be crypto, whatever is on the top of your mind. Type in two of those. Give me the symbol, not the name. Give me the symbol. Type it in the question section right now. I'm going to build a custom watch list based on your requests. Think of this as your request hour. Okay, so remember back in the old days where there was actually a radio station. They're still around, of course, right? And people would call in, right? Remember the call in? Oh, I've got a request, and they play, hey, caller, where are you from? Okay, think of that as this moment. So go ahead right now, type them in, and I'm going to build us a watch list. And so that way I'm not using something canned, something pre-built. A lot of these names I already see coming in. I trade often, analyze often, but that's okay. It's going to be built off of your requests. So I've got the S&P 500, the SPY, the Qs, FCX, UCO. We've got Merck, Netflix, Caterpillar, Micron. All right. So I always enjoy, it's got to be the trading nerd in me. I always enjoy seeing and learning about what you all are interested in. All right, so Investorexpo 152023. All right, so I'm going to build this. Now, the software in front of you is TradingView. Some of you probably have heard of it. I mean, they're they're probably the largest. I haven't done any extra research on it, but they're probably the largest charting platform in the form of number of users. To me, that's the best software I've come across, and it's the most reasonable priced software, which is nice. One of the things you'll find about me is I don't really like expensive software. Most expensive software is built on simple premise, built up and snazzed up in a nice, beautiful user interface. But there's only so many ways to trade the market, in my opinion. You've got to know trend, and without momentum, aka volume, there's really no market. So those are the quintessential backbones of what makes the market what it is today, right? Transactions. EPD, I love EPD. Great LP, great dividend payouts, smart place to be. Been talking a lot about that in my live trading rooms, is how to leverage dividends and LPs and all that good stuff. All right, so here's our list. We got the S&P 500, we got NASDAQ, FCX. So we got some transportation stuff. We got UCO. What is UCO? Okay, that's that's right. Pro Shares Ultra crude oil. It's like a 3X, right? We got Netflix, Caterpillar, Micron. We got the 20-year Treasury bond. All right, we have ARC, Kathy Wood, Innovation ETF, and then we've already talked about briefly Enterprise. All right, so there's 2 things I want to point out here. Number 1, TradingView. Okay, so if you like it, let me know. Type in the question section. I'll give you a link. You can try it out. Very reasonable price. In fact, the system I'm going to share with you today, you can run the entire strategy, everything you see on the screen, for free. You don't have to pay any monthly subscription charges on their basic account. So you can sign up, you can register for a basic account, not pay anything, and you can run the entire strategy here without any extra software costs. Once again, that was one of the things we sold a lot of, was software and expensive software. And so ultimately, any type of resource I can provide, any type of tip I can give of a free resource, to me, helps the overall business costs, right? So I think of trading as a business. So you have overhead. The overhead we're familiar with, right, is when I place a trade, trading cost, right? Not many brokers, right, will let you trade for free, right? They've got to make an income, right? So there's a trading cost associated. That's overhead. There's the education you buy. Many of you may have picked this up from a friend or neighbor, but most of the time, if you've been in the financial markets more than a few weeks, you bought some type of education, some type of strategy, some type of widget, maybe it's an ebook, maybe it's a newsletter. That's an overhead, right? And so ultimately, every overhead that we use to invest, right, we need to get a return on that investment. So for me, if I can alleviate the overhead, I can focus more on driving profit. So that's why I always focus on treating trading, number one, as a business, because most businesses have a plan. Most businesses have systems in place. You have protections in place. So less of the business focus on making money per se, right? But it's also what else around the business can I control? Well, cost is one of the biggest things we can control. So that's why I like to use this, because if you want more, you can pay. I use the pro version. So if you're looking at the page, I am an affiliate, but it's only because I have so many people use it. I said, okay, well, I might as well just sign up as one. But if you'd like a link, let me know. We'll drop it to you. But I'll make a couple bucks. That's about it. But I just use it all the time. So ultimately, what I'm going to share with you is the template here. Okay. Now we're going to use your requests on the right. And I'm going to start here by first breaking down what I have here. And I'm going to show you how we leverage it. Now, on the top left is where you're going to see the list of indicators. And I'm going to hide a couple of them. We don't need them initially. So the first thing I'm going to introduce is the combination of these trend lines. These are moving averages. These are not exponential moving averages. They're not weighted moving averages. They are simple moving averages. Many of you have heard about them before. They're one of the most commonly used, commonly discussed pieces of analysis. If you watch, Fox Business, Bloomberg, CNBC, whatever source you use for news, or maybe you watch YouTube, maybe you read the paper, old school, right? You'll hear conversations of, oh, Tesla's on the 200-day moving average, right? So not only do retail traders use it, but also big money follows these larger moving averages. So what they're doing is they're basically giving us a trend. They're giving us a price trend, a trend line. Now, if this is basic for you at this stage, stay with me. There's people in this room that are newer to this. So if you just give me a few minutes of your patience, I'd appreciate it. And then I'll jump right into how the strategy is implemented. So with the moving averages, there's abilities to customize the length or the time or the number of bars, the data that we're using to build a trend. Okay, it's a trend line. So we'll start with, let's do Merck. Merck and Company. That's a very strong trend. Oh my gosh, what a beautiful pattern. So the blue line, I'm going to start there for a second. Let's start with the blue line. I'm going to hide the rest. That is a 10-day moving average. So essentially, 10 days back, you take the close price. Okay, so mind you, there's an open, high, low, and close. The close price is the most important price. Doesn't matter how high, how low, right? Think about buying a car. I just bought a car. Me and my girlfriend, well, my girlfriend just bought a car, but I was with her because in my chief revenue experience, you would classify me as a salesperson, as a function of my life. And at that point, I love going to car shop. Now it's always I always introduce myself as being in the sales industry, but it's always fun because you can have a good dialogue with another salesperson. But ultimately, what's interesting about the open, high, low, and close, think of it as this is a negotiation happening in front of us. So let's go to today. Okay, so here's today. It is the 5th of January. See it here on the chart. So Merck opened, the price opened today at $111.59. It went as low as $111.42. Okay, so that's the low price of the day. We opened the bid, right? Think about it. We opened the offer at 111. Well, it went as low as 111.42, so it fell down about 17 cents. But then we had a high price of 113.91. We ended up settling or closing at 113.64. So when you hear settled, you hear closed, that's one and the same. That is the ultimate price. Didn't matter how high it went, how low it went. Doesn't matter what it opened at, right? What matters is what was that final price. So the close price is the most relevant price. So if you go back 10 days, you're going to get and add up all those close prices, last 10, because I have 10 in my indicator here, then I'm going to get an average price. So based on today, it's a rolling moving average. So the reason we can go back in time and see this trend line, this blue line, because it's rolling. So every 10 days, it adds on to the last 9, right? So it's a rolling average. And so we have a timestamp of what was that average on any given day. So what it's telling us is what is the latest, most recent trend on price. So if I see today, and I see now that the price closed at 113.64, and I see where the price is, the 10 days, in this top left corner, you'll see the price, the 10-day in blue. That's the 10-day average price. Well, the 10-day price is $111.60. Okay, so if I looked at this and I told you, look, today's price is $2 higher than our 10-day price, would you think that's going up or down? Right? Is that a higher trend? It's higher than our trend has been, right? That's what a trend line does. If I'm drawing it, which has its own pitfalls, if I'm drawing manual trend lines, I'm trying to analyze the same data. The issue with drawing manual trend lines is that it's an art, right? The definition of drawing, right? The category of drawing is an art form. It's not a math form. Do you draw in math? You know, my kids are 8 and 9, and I see their homework. I don't see them drawing in math. You know, they're besides geography, maybe they're drawing a hexagon, okay? But there's no drawing in math. Math is objective. This is the math. Now, I don't really understand how math is done today. If you ever have small children, ask to see their math homework. It's a whole nother world from when I learned how to add, subtract, multiply, and divide. It's a totally different way to get it. Answer's the same, but it's a different process. So by utilizing an automated, because that's basically what it is, right? It's a mathematical calculation that's automated. I don't have to do anything. I'm getting a trend. Now, one trend is not enough data. This is a very short-term trend. It's only 10 days. So by introducing other time frames, so now I'm going to introduce the second. It's a 20-day trend line. So now I'm getting a basis of what is the trending price over a 20-day time period. Well, the 20-day price is 110.76. So the 20-day trend is lower than the 10-day. So what does that tell you about recency? Type it in the question section. So if I see that the 20-day price has a lower average than the 10-day, what can I take from that? The recent trend is moving up higher, right? So that recency is happening faster than the longer term. So there's a separation, right? There's now a distance between the two. That distance is very important. If I see the 10-day going below the 20-day, right? So if I come back in time, you know, let's just pick any time on the chart. So if at June 8th, on June 8th here, and I pulled up my charts, let's just use a back in time machine. This back in time machine, this replay is available for everybody. Great practice tool. Let's say I pulled up the charts here. This is Merck still, but this is back in the summer. And now I see that the 10-day is $91.20, but the 20-day is at $91.70. So I'm now picking up that not only is the price below, but the trend is also following suit, okay? So now I know that not only is right now, because here's the close is below both of them, right? So I'm below both the 10, both the 20. So I know today is lower than the 10 and the 20 average. But it's also insightful to see that the 10-day trend is also now moving lower, okay? Now, the more we layer on, the more data we get. But same concept as the 10, but it's just now a larger base. Instead of 10 days, now I'm incorporating, let's call it our middle trend. I've got a inner trend, right? I've got a close time frame, right? Really recent. Now I've got a larger subset of data. Well, now when I introduce the 50-day, it's the largest data point. This setup is very specific. Now you can go to Google, you can go to Investopedia, and you'll see a whole lot of combinations, a ton of different combinations of moving averages. to me, the time frame that you use, the combination of the time frames needs to be around your goals of hold time, expectation of trade length. This combination here, this 10, 20, 50, for me and my traders, is a swing traders setup. Swing trading for me, my definition and how I teach it, is you're in trades for days and weeks versus minutes and hours, like scalping. Okay, so minutes and hours to me, scalping. I like to break it down in time. So swing trading is days and weeks. And then you have what I would consider like position trading or investors, which are in positions for weeks and months. Okay, so you've got weeks and months and even years. Okay, so long-term trading. I have a different setting for long-term, like position investor side, and then I also have different setups for shorter-term trading, even shorter than this. So the swing trading is my preferred method. It's not a lot of hold time. I can turn through trades faster, but I don't have a worry about if my clients have enough money to be a pattern day trader. I don't have to worry about that. So my trades in this pattern, in this precise method, is for swing traders. You set a trade, it could fill tomorrow, it could hit profit tomorrow, it could hit profit in 3 weeks. My average hold time in this strategy is about 3 weeks, 3 weeks or less. That's an average. Some are 30 days, some are 1 day. Okay, that's how fast breakouts can move. So when I combine all of this, and let's come back to this bar. So now let's add to the story here. So if I pull up the chart and I see that the price is below the 10-day average, it's below the 20-day average, but we're above the 50-day average. The 50-day average in this model is your defining definition of uptrend, downtrend. As long as we are above the 50-day, it's an uptrend. This down move here is a retracement. There's a lot of traders can run into confusion around a retracement versus reversal. The reversal is when something changes direction. So if something's going up and then it goes down, that's a reversal. Through this run, when Merck is on an uptrend, right? It's making higher highs, higher lows. It's moving up. That is an uptrend. So as this market's rallying, this is an uptrend. Even though the price is pulling back, this is still an uptrend. This downward price movement here, that's still an uptrend. It's just retracing. This is an uptrend. This is an uptrend. This is an uptrend. Even this is an uptrend. So what I want to be buying here yet, that's the other side, right? First thing is direction. Where is the next likely direction to be? Is it going to be down or up? A retracement is short-lived. A retracement does not last forever. As the market extends, so that's the opposite of retracing, it's extending. That is the clear picture of which way the direction is. So you can see the extensions are longer. There's more bars in an extension, just naturally, not every time, most of the time. There's no absolutes, there's no 100%. In life, in love, and in trading, I think we would agree. But you just look at the length of how many bars are here in this up extension. There's less in the retracement. Extension, look at all these, look how long this run is, right? How many bars this is. Retracements are not reversals. It's not a reversal until it reverses. So if we are still above the 50-day trend, it's an uptrend. So what are we looking for? I'm going to show you how to put that together in a moment. But what I want to focus first on is the biggest opportunity to make money on a trade. Now, the second thing I'm going to introduce, I think of this in 2 steps. Number 1, we're going to combine pattern. Okay, so you're going to hear me use that a lot. So let me just get this out there. So pattern plus momentum, AKA volume. So what's above the line here, and I'm going to put the line on, is a volume indicator. Down below here is a column chart. Out of the box, if you go to, it's just simple volume. There's nothing special about the volume. It's literally volume. There's nothing crazy behind the scenes. There's nothing proprietary. As you can see here, these are all the most straightforward indicators. In fact, you don't have to even use TradingView. If you use Thinkorswim, if you use bar charts, stock charts, there's a million free charts out there. I don't think they're of the same quality of TradingView, but there are. Okay, you have charts with your broker platform. If you're using Thinkorswim, Charles Schwab, Fidelity, Tastyworks, Interactive Brokers, I don't know, there's a whole bunch of brokers, right? Most of the time you have access to some type of charting where you can look at price, look at, you know, candlesticks, what have you. These are common, and that's intentional. I don't want you to be forced into learning a new software. If you're comfortable with the software, use your software. You can use these settings in your software. There's no need to switch your whole life around the concept. Once again, I focus on simplicity, repeatability is my main goal. This is the transactions. Now, it's irrelevant below about the colors, red or green. I've debated about this in my live classes numerous times because everyone's first question is, well, if it's a red volume bar, should I be selling? Why should I be buying? Okay, well, the colors of the bars themselves are nothing but a representation of the candlesticks above it. So because we look back here, and let's just point out this big column, this big bar here. See where my cursor is? It could be gray, it could be white, it could be black, it could be yellow. It makes no difference what color it is. The candle above is green, so that's why it's green. But it doesn't look good. I agree. My clients don't like it because it looks weird if it's just gray. So they like the color, so we keep the colors. But that's just a footnote for you. The color doesn't matter below. What's most important below is comparing what happened versus what typically happens. So the same concept of the trading moving averages up top, same question down here is answered. There's a moving average built into this indicator. So I've turned on a moving average. The length is 20. This 20 is intentionally matched up with this 20 here in the middle. Whatever middle time frame I use, I want my volume to match. So I've got a mean. I've got a statistical symmetrical analysis of data. I've got 20-day moving average of volume. This is the number of transactions or shares bought and sold. This is not dollars and cents. Volume is the number of shares traded. So it is universal. So just because Netflix is at $300 and EPD is at $24.63, you're not getting a weighted dollar value volume for the day. Okay, it's number of shares traded. So what happened on this day, this big bar? Well, the number of shares is what is in green. Whatever number in this top left box, the left number is what happened. So 22.8 million shares were traded. That's bought and sold. That's not all buys, that's not all sells. That is total transactions, both sides, buying and selling. It doesn't really mean much unless you know what is a typical day look like for Merck. Well, the typical day at this point in time was 12.6 million shares. So independently, really, it would be hard to really gain any insight just looking at a raw number. But just once again, like we talked about the trend lines above, now if I know that there was 22 million today and the average is 12, my light bulb goes off and goes, wow, that's a lot of activity. Holy cow. Why are we crying? I'm in a webinar, it's loud. That's a lot of volume. That means something. When there's low volume, that means something too. So a couple days later in June, 7 million shares versus 12.6. Well, let's fast forward to today, the most recent trading. So here's today, we're back here. Last volume that was above, same concept, see the candlesticks above or below trend line, same thing down here, okay? The last big volume day was, yeah, helps so I get to today. There's today. Sticky chart. Get rid of the replay. There we go. 9.5 million versus 9.1. It's not a whole lot above, but it's above the average day. We don't have to be subjective. Okay, we're talking about objective data. I don't want to have many decisions relying upon subjectivity, opinion, thought, hopes, wishes, dreams. We can't remove all subjectivity. I mean, that'd be quite boring to be a trader. If there's no emotions, there's no excitement, there's no fear, right? Then there's always a level, no matter how many trades I've placed in my career, no matter how many classes I've taught, there's still a level of butterflies in the tummy. And that's what makes it fun and exciting. So I'm not going to remove all of it, but we're going to try to keep them to a minimum. So objective, is it above average, below average? Okay, that's going to mean something for us. So when we combine the pattern, uptrend, we combine then momentum in the form of volume, that's where we can catch breakouts. Now this is an active breakout. It started way back here. The signs of this breakout showed itself back here. This is the benefit of this breakout here, this momentum that was created back here in this trend. The same happened on the down reversal when Merck sold off. Okay, so what my goal here today is to be able to help you find this point in time in a click of a button. If I showed you how to find this opportunity before it happened, this pattern itself, before it happened, how many of you would find value in joining today's presentation? If I showed you how to find this moment, this specific look and feel that then set up this move. Same thing with Netflix, this specific move. I got a trader saying, heck yes, okay? If I showed you how to find this specific move. If I also showed you, uh-oh, time to get out of this bad boy. If I also showed you when to identify sell-offs, big reversals on the downside, like here. See, what I'm circling here are reversal points. These are reversals, right? It goes up, it comes down. It's down, it comes up. Comes down, comes up again. This is objective. This stuff, this right here, I'll be able to deliver to you in a click of the mouse using basically free technology. Like, you can pay for, the reason I have the pro version of TradingView is because I've got all of these watch lists that we use in classes. I've got, I don't know, probably 100 watch lists that we use in classes and strategies and in different types of trading. That's why I have a paid $14.95 monthly cost, because I need to have all these watch lists. That's why I have them. If I didn't have to have if I didn't have to pay for the watch list, I wouldn't pay for the software. I just use the free account. But this pattern, you're going to see it on every single one of the stocks you gave me. SPY, go to the breakout points. Okay, breakout here. All of these is a specific pattern that we can search and find. We can filter and find. Breakout down, breakout up. All of these reversal points, FCX. Look at this beautiful breakout point here. This is identifiable in advance. This is catching breakouts here. Look at the price. Breakout showed itself at 29. It's now at 39. Okay. This is the quintessential basic of the market. Now, UCO, Ultra Shares, that's the reversal point. All right. First time across down below, you have two little reversal points there. You go to Caterpillar, there's a bunch of reversals here. Okay. This pattern. Let's talk about Merck first, or Caterpillar. It's on the screen. I'm going to go back in time here. I'm going to show you the pattern. This is how you catch. This is the whole catch method. Yep, everything is easy after the fact. That's correct. Everything is easy after the fact. It's always easy to go back on a chart. pattern and momentum. So what's happening here? I'll tell a story about Caterpillar. I'm not going to pull up any financials of the company. I'm not going to pull up any Twitter feeds. I'm not a big Twitter fan. I'm definitely not going to go to Facebook. Not a fan there either. Really not a big fan of any social media personally, but that's just neither here nor there. Caterpillar right here just broke the 50-day trend line. It just didn't break it. There is a over 10% increase in trading activity at the reversal point. That's a trend line break. Okay, so it was trending down. Now we had our first moment of a reversal. This reversal point is the setup. It's not the end goal. Okay, we're not in it yet. Once again, remember, we want to catch these. We don't want to chase them down. So just as, I don't know, you just have trader as your name. I don't know your name, but as we'll call you TT. As TT has said, right, everything's easy after the fact. This whole setup here is based on the same premise where I want to find the opportunity to break out. What is the recipe? Okay, well, the recipe is I want to find a trend break, a trend reversal. So where something's trending down, I want to catch the point where it goes up again. But it's not independent and it's not powerful unless we have the money. Retail traders like you and I cannot move the market. We think we can, we'd love to. In fact, we probably, maybe it's a small cap stock or a micro cap stock, we can move it, right? You know, something trades 10,000 shares and it's 70 cents. We can all put in $5 and make the thing move like a rocket ship. Now, come time to sell it, no one's going to buy it from us, so it's going to fall back down. But I'm talking about a small cap or higher, so $200 million market cap to, you know, Apple's gazillion market cap, wherever they're at today. Okay? We can't move that market. We can't move that price. We can't get all of our friends and neighbors together and say, okay, let's all buy, you know, 1 million shares together. So that's 50 million shares. Let's go buy Apple. It's not going to happen. So for me, the way I like to view this is, how do I know where other people are trading? Well, I can see that the data in front of us. So I now know that 3.4 million came in buying Caterpillar. I also now have identified a reversal point. Now I don't have to visually see this. I'm going to show you how to set your screener up to find these in a click of a button. Once we identify a potential breakout, that's all this is right now because it hasn't broken out yet. The way that we confirm a breakout is we need to see the price go up. So what we do is we use a specific order method, meaning placing trades, a method of placing the trade itself, where we set up in advance of the market being there. That's a catch method. So what we do is we use a simple step-by-step checklist that allows an easy, repeatable process, and I'm going to show it to you so you can see what it looks like. And it not only helps you set up how to find these opportunities, but it also gives you step-by-step instructions of how to actually place the trade itself, where to put your entry orders, stop loss, profit targets. If you're going to trade the option, there's option selection criteria, so you know which option chain to select. And this is what it looks like. It's extremely simple, and it's just a few steps. So this one I'm showing you here is called the aggressive bullish checklist. And it's what it sounds like. It's aggressive. Why? Because we're going off of one data point. We're trying to be aggressive and catch the earliest moment of a reversal. That's why it's aggressive. The bullish is we want it to go up. Okay, so simple bulls go up. And it's a checklist because you can check the boxes, right? In here in the middle is the recipe to find breakouts. This is the exact screenshot of the settings to find this type of pattern, an aggressive bullish checklist. So my traders take this and they go save this in their account, and they can follow along with my trades as well as they trade this on their own. They then can simply, with a click of the mouse, they can pull up any stocks that meet this criteria. It's a filtering process. I'll show you what it looks like in a second. Then below here it says trade setup. So set pending entry. So the key is pending. Okay, this is a pending entry. meaning it's in advance of the market being there. I trade right now. It's 4:51 on the East Coast. The market's closed. This is when I trade. It could be now, it could be 7 o'clock, it could be 8 o'clock, it could be 9 o'clock. As mentioned, I walked away from my executive job. One of the main reasons, right, was to be an active father. So my kids go to bed about 8, 9 o'clock, sometimes 9:30, and that's when I have the time to trade. So I picked up this strategy over the last several years and fine-tuned it so I could fit my lifestyle. I don't have to change my lifestyle to trade the market. I think that's where a lot of traders get into trouble, is they associate themselves with a strategy, a concept, a method that is counterintuitive to their normal lives. So if you're like me that likes flexibility, you don't want to sit in front of your charts all day and research and trade, maybe you don't have the time or the luxury, this method is perfect. It's a setup at night, everything's set up. You see here, entry is set up, my profit targets are set up, and my stop loss. One ticket, just one ticket. One single order ticket. Not 3, not 4. Most of you trade with one, your entry. You know, I've worked with thousands of clients. I mean, tens of thousands of clients when I was a chief revenue officer. And the large majority of traders never use a stop loss. And they're the same people that came back and said, I blew up my account. And I said, oh, maybe you need help on stop loss placement. And they're like, oh, I didn't even ever use a stop loss. It's the most underutilized order. And, you know, there's no wonder people say, man, I blew my account, I blew my account, I blew my account. And it's like, guys, come on. You've got to protect your assets. It's like a business. You're not going to start a business and not have, a stop loss. You're not going to have any protections in place. Well, hopefully you won't. You wouldn't, right? Same thing in trading. So every single trade that I place, every single trade that I send out as a signal always has a stop loss. Got to mitigate risk. There's no 100%. There's no absolutes. Got to mitigate. And it's profit targets. So literally, my traders in 15 minutes or less have trade set up and they're done. If the trade breaks out, they catch it. If the trade doesn't break out the next day, they're not in the trade. Trade cancels. So once you actually set up the pending order, once you set it up, you don't have to touch the trade. It's either going to get in and break out and you'll catch it, you'll be in, or it doesn't. And that's fine. Pattern changed, it didn't confirm, market pulled back. That's fine. I don't want to buy it. I don't want to buy it if it goes up. But I don't want to chase it after it goes up, right? That's the difference. I don't want to chase it after it goes. I want to be there at the market open and catch it. The only way to do that is you're either in front of your screen at 9:30 and you're smashing the keyboard. Or you can set up a pending entry in advance and have it sitting there automatically waiting. So you can go to drop your kids off at school, go to Starbucks, go to the gym, whatever. Life goes at you, go do it. Your trade is ready to rock. You don't have to babysit. I got a question from Brent. Matt, does pre-order entry give an advantage to the market makers? You see, the pre-orders are not even, I actually had this conversation with TD Ameritrade a couple years ago about the same concept. So when the pending order is not like a stop loss that's on an active position, because it's waiting on a trigger. So it's not even viewed as the same ticket level as like having a profit target or stop loss on an active trade. See, it's not even an active trade yet. So because it's a trigger contingency, it's not even available at the same level to the market makers as it is to like a stop loss that's already on an active position. So you'll see it when I show you how to set one up, but it's that fact that it's not a live trade. It's not a live trade yet because it's a contingent order. So the order must meet the conditions. See, the market makers don't know tomorrow if it's going to meet the conditions. If they did, they wouldn't be a market maker, right? If they knew what the price was tomorrow and the next day and the next day, right? They wouldn't be doing what they're doing. They're setting market based on what the value is in the actual market itself, which is driven by buying and selling. So they know what the price closed today, right? They have an idea what it's going to open tomorrow, but they don't know if it's actually going to happen. So the method is we're sitting waiting on a specific contingency to happen, a specific rule that we set. So we're basically telling the brokers, we only want to buy this at this price. If that happens, then we execute the trade at that price. And I'll show you how to do that. So everything's set up in advance, okay? The bottom section here is for my option trade. If you like to trade options, this is how we then select the option chain. You see, what's different here is we're focusing on the stock, the underlying stock. We're finding breakout patterns of a stock. If you want to trade the option, then you can drill down on that stock, look at the option chains, following these 4 simple steps, and trade the option if you like. Most people do it the other way. You're an option trader, you just dig through option chain after option chain after option chain. Once again, I like to keep it simple. These are calls, these are puts, this method. Okay, if it's bullish, you're buying a call. If it's bearish, you're buying a put. Simple. You just need the basic level permission in your broker. You don't need to have condors and all the other advanced strategies. You don't need to have that. Calls, puts. The premise of an option, right? The whole idea behind an option is that it's a derivative of the underlying stock. So the derivative means it's a part of. As a stock price goes up, the premium goes up. If the stock price goes down, premium goes down, right? And I'm talking about on the call side. And now if I'm on a put, right, that means I'm buying the bearish move, right? I'm trading a bearish move, and I'm going to buy a put on the option. So I want it to go down. So why wouldn't I start at the stock? Because that's what drives the option. So ultimately, this is 1, 2, 3 steps on a stock trade basis. So if you want to trade the stock alone, you're going to follow this method. If you want to trade the option, you're going to use these entries, profit target, stop loss to also manage the option automatically in advance of pre-order type. So I can set up a stock trade in advance of the market being there with everything lined up. I know exactly what my profit target is. I know exactly what my risk is. And if I want to trade the option, I can do the same thing all in advance of the market. Everything's protected. Everything's ready to go for the market. Market hits, I'm in. Doesn't, I'm not in. So with this method, I'm going to put up next to it, and you'll be able to tell me if this showed up on October 21st. So when we look to the actual, let me zoom in here a little bit more. You can see it, and I'm going to go side by side. So here's the settings. This is aggressive. There's a few criteria. That's it. Conservative has more criteria, okay, more filters. Relative volume is momentum. Relative volume above or equal to 1. So that means it's got to be above average volume for the day. That's what this tells us. Last price crossing up on the simple moving average 50. So the price is crossing up. It's a reversal from down to up against the 50. Okay, so go to the chart. Is the last price crossing up the 50-day? It is, right? There's the price. Okay, look down below. Are we above the average for the day? So this showed up on the filter. This is what it looks like. So let's talk about right now in time. 5 o'clock. Let's see what trades are out there. You see the difference of this list here. Okay, this 1, 2, 3, 4. You know, these stocks you gave me, some of those are at a point of buying or selling. They're at an opportune moment. Most of them are not. Most of these are not. So there's 2 ways I look at the process I'm sharing. Number 1, there's analyzing active position. Okay, I'm in an active position right now. Where are some potential road bumps? Where are some support resistance I'm going to run into to have expectation? The other side, the main way that I interact and use this is to find a trade right now. So I want to find a trade that's set up today, certain criteria today that took place, that if it confirms tomorrow, right? If the pattern actually confirms itself tomorrow, I want to be in. So once again, it's 5 o'clock. So I'm going to go to my stock screener, and there's a lot of free screeners too. You don't have to, once again, pay to use this method. Pay other people. You can pay me, right? But for software, okay, you don't have to pay for software. Here's the filters, okay? This is aggressive bullish breakout. Market caps 200 million or higher. I'm not going to mess around with any low volume stock, any micro caps. I'm going to trade stocks that are 200 million or higher. That's liquidity. You see, with this very specific filtering process, we answer a lot of key questions. Number one, liquidity. I want to buy something, I want to sell something. So here's market cap. That gives us liquidity. So I have an L there. I'll probably make it black. Maybe it's easier to see. It's hard to tell on my side what you can see or not, but L for liquidity. Volume. This is the number of shares today. Okay. I only messing around with 1 million shares or more. That's also liquidity. Average volume over 60 days. If this is today volume, this is a history of volume daily above 1 million. Once again, liquidity. I always want to focus on stocks that are symmetrical, that have good historical trading activity, so it can run close to pattern. The farther on the peripheral you go for trading, the weird stuff, the new stuff, the stuff that's, you know, on the edge, that doesn't even make money, right? A lot of tech stocks fall in that category. Health tech can fall into, a lot of the stocks can fall in that category. That's what this is helping identify. Let's get some liquid stuff. Let's get some well-known household names. Let's focus there. Relative volume, once again, that's momentum. Okay, so I'm looking for momentum with this setting. Change price above 0, that is pattern. Okay, so I'm looking at pattern. Price crossing up to 50, that's also pattern. So with this 8 filter template here, I'm answering liquidity, I'm answering momentum, and pattern. So what happens is every stock, any stock, it's not every stock, any stock that fits this criteria, it has to check the box for all of these. It's not an or. You know those formulas, if you're into Excel, right? You go this or that. This is an and formula. So the symbol has to be common stock, has to be in the New York Stock Exchange or NASDAQ, and market cap greater than 200 million, and volume above 1 million, and volume averaging over 1 million, and relative volume above or equal to 1, that's 100%, and change price above 0, and price crossing up above 50. So all of these have to be checked off. Now we get a list, okay? So once I run it, down here on the left, you'll see there's 66 matches. Once again, it's not really relevant unless there's something to measure it against, right? Well, to give you an idea, if you didn't know, you're gonna know now. From a common stock, I'm just gonna get rid of all these filters. And I'm just gonna focus on common stocks. I'm gonna get rid of all these, reset them. I'm gonna show you how many stocks we're actually looking at. Only 2 filters, common stocks or depository receipts, New York Stock Exchange, ARCA, NASDAQ, New York Stock Exchange. That's it. There's no pattern, there's no volume, there's nothing else here. There's no market cap. 5,839 matches. It's impossible. Okay, I don't like absolutes. Impossible is an absolute. I'll take that back. It is highly unlikely that a human being like you and I, hopefully we're all human beings, can go through these all and analyze them and research them and try to time your buys and sells, right? It's ridiculous, right? It's not possible. So if we have a method of trying to catch a specific pattern, when now you see 66 show up, that means we're literally down to 14, right? 66, just reset. 14 matches. 14 out of 5,000 stocks meet this criteria. So of those 14 matches, look to the chart. Okay, I'm gonna get us some more real estate here. And you're gonna see the same thing, the same type of pattern that we've seen. I want you to see there's a cross above the 50. We got our volume. Let's go to Hess. There's our cross to the 50. We got our volume. It's below this little lightning bolt above volume. At C, crossing back above the 50. Okay, Seagate. Just crossed the 50 day. Ball court. Okay, what we asked for is what we're going to get. 14 out of 5,000. We'll call it 5,400 for easy math. That means from an aggressive breakout pattern standpoint, okay, that is a small, minute number. I mean, this thing is going to give me multiple decimals. Look at that. That's a pip, right? Anybody trade Forex, right? A pip, PIP, price interest point, right? That's a fraction of, that's 1/100th of a penny. That's what this is. That's 25 pips. That's a quarter of a percentage point, of 1 percentage point. It's a very small, minute number. And it's whittling this all the way down for us. Okay, that's why I say at a click of a button, you can get trades, you can get opportunities. Well, what if you want to trade the other way? Okay, well, if I want to trade a bearish move, then I can just flip it around and trade the aggressive bearish breakout. Now, this is going to look different. Instead of breaking up, these are going to be breaking down. But the number is 51. Okay, so this is what I'm going to give you some simple ways to analyze the market. You can wow your friends and tell them this is the trend of the market. This is what happened today. Now, between aggressive bearish and aggressive bullish, the only difference is the direction. Everything's the same, market cap's the same, everything's the identical same. Exception is the pattern's different. But there's 51 matches here. There's only 14 matches on the bullish side. So where was the overall sentiment of volume and direction today? What had the majority in this pattern? Well, it's the bearish side. To keep things based on momentum and direction, you want to follow the market. So the simple way I talk about it is go where the majority or where the more matches are. Bearish side is where the more matches are. That means you're seeing more of a downward price move with volume. Mind you, this is with volume. So this isn't just price falling. So let's look at Deere. See the opposite look? I love this bearish breakout at highs like this because the market sentiment drives faster to fear. Fear is a faster, larger, bigger mover of people. Of that emotion of fear, that feeling of fear will make you move faster than greed. If I got a stopwatch and I put you on the starting line and I put a cheetah behind you, not a cheater, a cheetah, the lion, or the cat, big old cat, cheetah, and I put them behind you, you're going to run a lot faster away from that cheetah. If I put $1 million in front of you, I guarantee there would be a distinct difference on how fast you ran. You may feel like you're running faster than $1 million at the end of that 40-yard dash, but I can guarantee it with a 98% certainty that you will run faster in that 40-yard dash with a cheetah chasing you. That symptom is what happens in the market. That's why there's a saying that the bull markets last twice as long as bear markets. What's the opposite to that? That means the bear markets go faster, right? They end faster and they move faster. That's the opposite to that statement. That's the other side of that statement. But this gives you an opportunity now to find a crucial point in time to see that breakout, right? Let's go to Eli Lilly, healthcare. These are big dollar stocks, but it's irrelevant to the dollar. It's a pattern move. Eli Lilly, look at it, see on the top, see it breaking down the reversal, breaking the trend line. Beautiful counter trend line break for Sherwin-Williams. Union Pacific. These are all going to look the same because we're looking for the same pattern. Pattern breakout. Same momentum. So the question is, well, what's going to happen now? Well, this is the future, right? We don't know the future yet. So what I'm going to do is I'm going to show you the trade, and we're going to set up a trade. Now we're going to trade an option, and the simple reason why is I don't like to short stocks outright. I don't mind it personally. I don't teach it. Okay, I don't coach to it. It takes a mistake, one mistake, and it can be disastrous for somebody if you don't know how to short something, right? I mean, it's just to me, there's plenty of opportunities in the market, plenty of different ways to participate in the market without putting excess risk at play. And that to me is what shorting stocks and even writing covered calls. Even covered calls can become uncovered. You know, that's some of the stuff I, really only focus with people that are experienced and that can, weather any type of storm financially. So we're going to use options to trade bearish. And I'm not going to go, I would love to buy something. Everyone can associate with buying, buy low, sell high. The market sentiment isn't there. The predominant heavy weight of the market is to the downside. So I want to follow the overarching direction to make things flow, okay? I don't want to try to swim upstream. There's strategies for that. I'm not talking about that here. I want to talk about how do we get to a high level of proficiency. So one of the simple ways is let's follow the flow of direction. Well, if the overarching direction is bearish, then I'm going to follow that. As I'm looking at trading opportunities here, I'm not going to go find some random stocks. I have a list here of 51. Now, what I'm going to do is I'm going to look through this list. The patterns are all almost identical. What I'm going to be looking for are more likely stock prices, maybe high price 80, but majority I want to find somewhere $20 as a baseline on any puts. If I'm doing a call, I'll go down to $5 stocks. Okay, I'm just talking about puts specifically. So I'm going to put some level of a structure around what I look for to set up a trade, because I like to keep things affordable, so I'm not going to be placing, I don't send out signals for a $2,000 contract. Majority of my signals are less than $5 premiums. There's a lot more. The reason why isn't for affordability necessarily, that's a benefit. It's about flexibility. I'd rather buy 10 contracts than one contract. If I buy 10 contracts, 5 contracts, 2 contracts, 4 contracts, 6 contracts, then I have flexibility of how I manage money. I can peel off profit. I can lock in profit. If I've got 10 contracts in a trade, I want to take half off at a certain profit target. I'm going to book that profit. I can't do that with one contract. You're just either winning or losing. There's no flexibility around one contract. So I always try to use contract sizing that allows flexibility of buying. You become now your own hedge fund. One of the beautiful parts of this downtrend, this bear market we've been in this year, is watching hedge fund activity and how often they're buying and where they buy in the downtrend. Because what they're doing is they're cost averaging, right? They're cost averaging. They're managing. They're not buying a lot of new stuff. They're buying existing stocks in their portfolio. Because if they loved it at 99, they must love it at 25. Well, why can't we do the same? So how we manage money in that level, we can do ourselves too, right? Most people just don't put the objectiveness around that concept, but that's what I teach in my classes. But ultimately, I'm going to go through here and we're going to look for, I'm looking for specific pricing. What I want to look for on a pattern, because there's 51, right? They're not all created equal. They're close, but they're all not all created equal. Some of these have higher volume than others. Some of these are more actively traded than others. Some have more options than others, okay? So I want to get a good price. I want to get something that is affordable, and then we're going to set up the whole thing soup to nuts. You can follow along live if you want. You can do a demo trade. You can just write it down and see what happens. It's up to you. But this is the process I go through every night. So I want to look for a coming off a high. Okay, that's one of the simplest ways to sift through this. You see, this is what I'm talking about here with Cisco. Let's get rid of some of this old stuff that we had. So ultimately, you see this, we're coming up a high and then we're pulling back down. If I scroll it up, versus trying to sell something on a low, that works, but we have a chance here. We have 51. We can pick an ideal pattern. This is why I have live classes. So my service is not just signals and you're on your own. I do live classes 4 hours a week. We use it for analysis, training. If I have a new strategy, a new checklist, the market changes, so we go through a new method of finding opportunities. I go through that 2 hours a session, 2 sessions a week, Mondays, Thursdays. So there's 2.5 days between markets, and we actively trade and follow and go through the markets together. So we go through all of these, and what happens is the markets change, right? What we did 3 months ago isn't what we do today. How we use the method I'm sharing with you is different. But this method here on the charts has not changed. So let's see if we can get some good high-low sales. I'm looking for something coming off a high, especially if it's fast up. What goes up fast comes down. There's one. Okay. So this is, what is this? Juniper Networks. Okay. So we're making higher highs here. If you haven't used this before, how many of you type in me if you know what a high and low is, the definition of a high and low in the market? Just type in a quick yes or no. I'm not going to call you out if you don't know. It's fine, because I'll give you a simple trick here to do it. All right, so yeah, we got a couple saying yes, a couple saying no. Okay, well, it's very simple. There's a defined high. I'm not talking about a high of a candle. Okay, I'm not talking about an open, high, low, and close. I'm talking about a pattern high. A high is defined when you have 2 highs, and I'll zoom in here. It's a pattern, okay, meaning it's more than one. Okay, so where my cursor is, that's a high of this day, 33.95. If I look to the left 2 bars, the high here is lower, the high is here lower. Now I look to the right, this high is lower, this high is lower. That's a defined high. It's very important to understand highs and lows because it helps us understand where retracements can end, where they can start. So it's a key component. So if you have access to an indicator, it's called fractals. Could be Williams fractals. You know, your platform may be different, or if you're following TradingView, it's called fractals. The red arrows and green arrows are defining highs and lows. Highs and lows. If you can understand these trend lines so far, if you can understand that the red is resistance. Okay, so red is a high. Highs are resistance. Lows are support. Okay, so green arrows are on lows, red arrows on highs. That means resistance. I expect resistance there. Lows, I expect support there. Okay. As this market broke out bullish, that's the bullish breakout, these highs are expanding. Well, as I stated earlier, when we started talking about Merck, and I saw the 10-day coming down, when the 10-day starts crossing down, you expect the market to come to the next support, which is the 50. I don't get too advanced on this, but this moment of time is where I want to focus on. What we're going to do now is we're going to set up, I'm going to set up the entry and profit targets and a stop loss, exactly as the checklist states. I haven't looked at the option contracts because there's a specific option criteria that we look for. So hopefully it has it. It looks pretty light. So this is what I'm looking at. So I just have the option chain up with Juniper. I'm looking at a put side, so I'm on the right side. 100 I want is open interest. There's not 100 in open interest. I mean, there is, but this is not a liquid option. I want to see hundreds of open interest. So volume for stocks is number of shares. Options, open interest is your volume. That's where your momentum is. You want to see liquidity and open interest. So very low. Okay, so we're not going to use Juniper. I want to be able to set an option up as well. So not every stock is optionable, is an ideal option, is a better way to phrase it. I'm just going to scan through here quickly. Let's see. So this probably, as you can see, I'm not doing legwork. I'm just clicking a mouse. That one may be one. Let's go Honda, Dropbox. Veradigm. They just changed their name. I thought MDRX was somebody else, or maybe they changed the name to this. Yeah, so quickly, remember, simple, first thing I always look at, open interest. If you're buying an option and this is like 0, look at the spreads. Okay, that's $1.10. Coming in at $1.75, the bid is 65. So you buy it here, look what people are selling it for. well, there's not even nobody that owns it. Market maker is going to flesh this out. So you want liquidity. The higher open interest, you'll get lower spreads. You know, that's one of the also benefits of getting a good process of finding the appropriate option. That's off the bottom. Let's go up a little bit. TD, that might be a good one. Dominion. All right, so let's I don't know. I think we go TD. Let's do that one. So if we look at TD here, let's see. Hopefully they have the options. Let's see. The put side. This is way too many on a chart. That's really low as well. You know, this is not unpacking that. You know, you want to make sure you got liquid stocks. And as you can tell, I haven't preset this up. I would already know. But that's part of, I'm showing you exactly the process. This is a utility company, Fiserv coming down. We have to move up a little bit. Let's go 3M, PPG. All right, let's go PPG. This is in process industries. I'm just looking at the sector. These larger ones may have the open interest we need. It's a $1,000 contract. And American Express is going to be up there. Yeah, good question on open interest. So open interest is not it's the number of open contracts. So if I sold my contract today, I would not be in open interest. So daily, you can see it go up and down. It's not a cumulative, it's not a summary of how many total contracts were purchased for a particular option chain. It's a liquid number. So, you know, if there's a big rush of volume, you'll see open interest go up, but it's also offset by people getting out of the option. So it's not a flat, you know, a summary. It's not like the elections where every vote the thing goes up. Well, feels like it should. That's a side pun. But anyways, so open interest is fluid. It goes up and down. But at the time you see it, that is how many contracts are open. They haven't expired yet. They haven't been exercised. They're open and available and in the market. That's what open interest is. All right, let's see if we can find this one, AEE. Car part, co-part. All right. One of the most important, you know, I'm just laughing out loud because the most important, lesson I work, especially if you're experienced, you know, if you're an experienced trader, you know exactly what I'm talking about, where you have the itch to trade, so you trade. Now, I'm an opportunistic person. I am optimistic at 90% of the time, running at anything's possible, let's make it happen type of mindset. And so by having specific rules in place, it forces me to be patient. So I appreciate your patience and watch me do this, but I'm giving you a real glimpse inside of following the process, because I didn't do this in advance. I didn't even have the data yet, right? The day wasn't over when I started this. So now I had the data, I'm literally going through. And in fact, more likely I'll send this out tonight to my traders. But just because you can doesn't mean you should. Just because you can trade something, you can buy or sell something, doesn't mean it's the right time. Okay, so that's why this checklist, though it looks simple, has extreme focus on creating patience in the process. The patience is built in here. if you're going to be diligent, it forces you to be patient. Okay, so here's Cisco. Everything looks good. You know, so we'll set this up. I just showing you what I looked at. I pulled this up. I knew Cisco would have it. You see the 3,390 open interest, that checks the box. Now, ideally, I want 65.75 delta. We're going to go with 56. It's in the money. That's the most important thing for me, is being in the money at entry. If you're conservative, go with the $50 strike. Okay, so if you can't handle drawdown, you know, you may, once again, this is walking the walk versus talking the talk, right? Many people say, I can handle drawdown, I'm a trader, right? And as soon as you get negative P&L, your mind shuts down. That's not handling it well. Handling it well means I expect drawdown at any time. As long as that drawdown doesn't draw down below my limit or above my limit, AKA my stop loss, I'm fine. I expect to deal with drawdown. I expect to lose. I have a stop loss. The only reason I have a stop loss is because I know that there's a likelihood that I'll lose. So rather than lose the entire investment in that contract, I'm gonna cut my losses, stop loss. So I intentionally go into it. The only reason I would place a stop loss is because I am conscious of the fact that not everyone wins every trade, that you will lose more individual trades than you'll win over a lifetime. How you are profitable is different. It's because you use equity management, that you have a stop loss. You have exits predetermined in advance of. That's what I'm going to show you now. So we're going to run through this, and I'm going to do a put. Ideally, we'd be a buy, but it's not a buy scenario right now. I'm not going to force a buy just to show you something. The market is heavy to the downside. I'm going to follow that. There's 51 results. Coleman, shut the door, please. Cole, shut the door. Sorry. There's 51, right? So there's more results to the bear side. So what we're going to do is I'm going to follow the checklist. I'm going to find today's low. I'm going to use the magnet. It makes it very easy, very clean. And I'm going to find today's low. I'm going to click my mouse. I'm going to click on it. I'm going to draw it down one tick, 1 penny. That's my entry. That's my pending entry order. Stop loss wise, following the rules, I'm going to find a previous high. You want to go the highest recent high you have. In this instance, we're up here. Okay, so that's me, my stop loss. Now we may move that around to the next high. There's one right below it, but let's just see what this looks like on the screen. I'm going to go 1 tick above it. I'm going to put my stop loss. Like I said, you can learn to do this yourself, or you can just take my signals, but this is what it looks like. Now my profit target, I've got multiple ways I run profit targets. The large majority of the time I run and I target previous support levels. Okay, so if I'm coming down, the market's going to chase support, previous support. That's here. Support, see the fractal lows, how simple it makes it? I look to where these green arrows are. There's my fractal low. So let's go to this first one. Let's see what the numbers are. Profit target. Now, I'm not going to use 2 targets because I only use 2 targets if I'm running a stock trade. You can use 2 targets. The second target in this model would be, I'd stretch it a little bit to this next one. Okay, these are close together, so I'd go with this one. So if you want 2 targets, you like the flexibility, that's what I would do. Now you can see I did not pull a number out of my hat. I said, oh, put my profit target at 20%, put my stop loss at 10%. I didn't do that. I was objectively looking at what pattern just happened. What's the pattern? I used the pattern to dictate where my price points are. If you don't feel comfortable, I don't expect you to be comfortable in one sitting to run this. I'll bring this checklist up again. Inside of this is my Market Pro Live support area on the charts. Okay. Down here we have all of this pre-recorded. It's about 10.5 hours. So all of these are video lessons. If you're not familiar, if you're not comfortable with trend direction, there's an hour and 20-minute video of how we use the trend line. In-depth, hour and 36 minutes on momentum, how to set up your trading view, how to set up entries, define profit targets, define stop losses, option chains, how to put the checklist and put it all together. Okay, about 10, almost 12 hours of content if you add it up. So don't worry if this is out of your realm. And once again, I also teach this live. It's the same. This is the same mechanics over and over and over again. I've got clients who've been with me for years, and they go to every session because they understand and they appreciate the habit, the process, repeating the process over and over again. I've got clients who've been with me for days. Okay, and we have open enrollment periods for certain periods of time. We're in an open enrollment right now. So now I've got the details set up. Okay, I've got the overarching layout of the trade itself. Now, something like this, we're going to find, and we're going to go back and use a closer stop loss. And this is the reason why. If this bounces off and comes up, let's say it comes down and comes back up again. If it comes up here, it's going to keep going up. So the proper use of a stop loss is to put it at the moment of last return, meaning if it hits your stop loss, that trade is going the other way. There's no chance for that to go back in our direction. Hopefully that makes sense. So you know you have your stop loss, amazingly enough, right? You know you're right when placing stops, when your stop gets hit and it keeps going against you. That's how you know you've got a good stop loss. If you have a bad stop loss, that means it comes up, hits you, and comes back down again. That means you have a bad stop loss. You didn't allow the market to breathe. You are inside of a pattern. You want to be outside of the pattern. So the reason I said I'm going to use this high is because I've got resistance here. I've got the 20-day. I've got the 10-day. So I've got 3 resistance. If it breaks these 3, it's going to go back up, right? So that's why using stop losses are wildly important. But you don't want to be too aggressive on a stop loss. You want to give it some room, but not too much room. And that's where the objectivity comes in. And hopefully you're seeing it. Now, once again, you don't have to master this today. So this detail, this is the parameters. Now, I'm going to take this and I'm going to put this into a pending entry format. Now, I'm going to talk out loud while I do it. Then if you have questions, I'll reverse it again, okay? Because I don't want to go through questions and then people go like, man, it takes an hour to set up a trade. It's really not that long. So here's the trade ticket. I'm going to move this over to the right, okay? And I'm going to pull up the tracking account right here. So we already decided we're going to go with the 47.50 strike. We've got the delta, that's fine. Ideally, I like 65. 82 is too much. You see the difference. Okay, the price difference is big. I'll explain that down the road if you want more information on it. So we're going to go with the $47.50 strike. 46.88 is the last price. I don't want to buy it here. I want to buy it 1 tick below the low. So I already know the low is 46.76. So what we're going to do is I'm going to right click. Every broker is different, but you can do this on any major brokers. Charles Schwab, Fidelity. You can't do this on an IRA, but you can do this on any other traditional account. Interactive brokers, you can do this. Tastyworks, you can do this method. It's not a proprietary order process of Thinkorswim, of TD Ameritrade. Just want to put that out there. So I'm going to go to my trade ticket. I'm on the put side. I'm on the ask side. So I want to buy a put. I want this to go down. I only want to buy if it goes down. Not just anywhere, but at a specific place. So what I'm going to do is I'm just going to set this to 2 contracts. This is how I track every trade. 2s. So what you're seeing down here is you're seeing 3 tickets, green and 2 reds. This is a OCO, one cancels the other bracket. That's what this ticket is. So I'm going to set up my entry and my profit target and my stop loss 1 ticket. Now I'm going to set a limit to the option chain. Okay, I don't want to overpay on the option chain. The premium, see the 210. So I just run and I teach a simple formula to forecast. This is a forecast model. I'm going to forecast what the price, what the premium is if we hit our entry. So we're 13 cents from the close to our entry. Remember, entry is 46.75. I'm trying to catch it as a breakout down. So it's 13 cents away. I'm going to multiply that by the delta, 7 cents. I'm going to add that to the ask. So 217. So I'm going to set a limit. This is the most I want to pay for the premium, 217. This is just the option premium. So I'm going to pull up this window. Here on TD Ameritrade, it's right on the right. It's the gearbox. And it's going to pull up a window. This is order number 1, order rules. This is telling the broker what I want done. I'm telling the broker how I want this trade handled. So the top half of this ticket is the option details, okay? I'm going to be buying a put, okay? That's the side I'm on, buy the put. Here's the details on top. I'm going to buy 2 contracts, Cisco, the 17th February monthly expiration date, 47.50 strike. I'm buying a put. I have a limit of 217. That's what this price is. This limit price is a ceiling. If this goes down to 46.75 and the premium gaps to $3, I will not take this trade, will not trigger. That's the option details. Now the condition to execute the trade, this is the pending order. The condition is I want to execute the trade only if Cisco marks less than or equal to 46.75. This must happen first. This will not trigger. The top will not trigger unless this condition is met. If this condition is met, this condition must be met. So you have 2 levels of management of the trade. It's a 2-step criteria if you trade the option. They both have to match, but this one doesn't matter unless this happens below. Even down here, you'll see it. Submit the following order. Here's the description. Submit the following order. Buy 2 contracts at 217 or better. So limit means at or better. So it could be lower. It doesn't have to be exactly 217. It could be 210. Wait until the following condition is satisfied. Mark price of the security is less or equal to 46.75. This order will show a wait condition status during waiting. That's the entry. This is only good for the day. This is good for tomorrow. It's a 1-day time frame. If it doesn't hit entry tomorrow, this trade will cancel for me. I don't have to manage it. It's going to cancel. So the next tickets are stop loss, profit target. I'm going to do the same thing. The difference is I'm going to sell, see the sell? I'm going to sell at the market of the option premium. I'm going to leave this good till close. I'm going to set my stop loss. I always set my stop loss first. So I want to exit the trade if Cisco marks at or above 48.99. Now, mind you, this does not matter. This ticket doesn't matter unless the first condition is met. The first green ticket must be met or this trade cancels. So now the profit target. I'm going to sell good for close. I'm going to sell the premium market if Cisco marks less than or equal to $44.30. I just pull that right off the stock chart. So once I have this, there's my 3 tickets, all in one. I've got my entry, my buy, and I've got my 2 exits. Entry is just good for the day. This must happen tomorrow. This trade must mark 46.75 or lower between 9:30 tomorrow and 4 p.m. If it doesn't happen, if this bounces up and never comes down, this trade will cancel. Do you want to short it if it goes up? No, we want to only short it if it breaks down and goes down. Okay, so that's just catching. I want to be at the right time, like fishing, right? Right time, right spot, so I can catch the biggest fish. We're catching here. We see a great horizon tomorrow. Water looks great tomorrow. I've got a red sky at night, right? If you're a boater, if you're a captain like myself, I've got a boat out in the yard. You know what that phrase means, right? Red sky at night, sailors delight. Red sky in the morn, sailors be warned. I should probably switch that for trading, right? So this triggering process is all taken care of, down to the option. So once I hit set up and go, you'll see the confirmation. This is what the ticket looks like. Order 1, that's the buy, that's the execution. The conditions of order 1 is it's got to mark at or below 46.75. Order 2, order 3, you can see the conditions. That's the closing orders. So once we hit send, this trade is now pending. So once I go to working orders, this is the ticket. You see this little key, they're locked together. This trade is done. I knew going into it what risk. If I was uncomfortable with the risk, I wouldn't set the trade up. I knew going into it what the profit target is. If I was uncomfortable with it, I wouldn't place the trade. So by the time we get here, our work is done. It's now up to the market. Once again, we cannot control the market. We can't make the market go up or down, no matter how much we beg, plead, wish, and hope. We can't do it. So our job is done. We've identified, and now it's set up waiting for us. If this goes live and triggers, most times it happens in the first 30 minutes. Sometimes it takes another couple hours. If it goes live, then what happens is this, see the waiting to trigger, it turns into these. See this waiting conditionally, waiting conditionally, waiting conditionally. These are active positions, and these are the stop loss and profit targets. Every trade I have tracking has every side of the trade protected. If you want to see it again, I'll go side by side so you can see the ticket again. Should have taken a screenshot, forgot to. So 47.50 strike, February expiration. Entry profit targets, you want to take a screenshot, do so. There's a camera button, exit full screen. If you exit full screen, you'll see a camera button on the top. Click it, this will save on your desktop. So how do you know this thing works? All right. One of the simple ways is I've told you exactly what to look for. All right. There's nothing proprietary. There's nothing that requires you to see. What I also love is the strategy some companies do is they'll call this like Max amazing widget that crushes the market. Well, all they basically did is take some indicators, slap their name on it, and charge you thousands of dollars for it. Now, there are some companies that actually build something proprietary, you know, which is amazing. And majority of people are amazing in this space. But everything's up in front of you. The comment of, oh, it's easy to go hindsight. Well, can I go back and make this green? And can I make this volume? I couldn't do that, right? Look what happened after that. Bearish side. Here's the last time Cisco looked like this. You want to know what Cisco did last time it looked like this? Come back to the last time you saw it on a chart. Does this check the same boxes that we just did? Type in yes. Is this the same checklist of the trade we just did? Doesn't that look identical to what we just set up? Now, mind you, this is back in September. What happened here? You would think this is the same trade we just set up. Let's go back to the current price. Maybe you can see it now. So look at these instances and look up and down on the chart. See this trend line break? See, we came down the trend line break. Look at the volume below it. See the volume below it? Okay. Volume, trend line break. Volume, trend line break. Go back and look at the opposite side. Okay, trend line break, look down volume. Look at the price go. Trend line break, saw that. Bullish break, saw that. Come back further. Bearish break, volume, look down below. Look at the thing fall off. This is just Cisco. Okay, that's what I call a snap down. Bearish bar here. Okay, look at that down move follow. Go to any chart. You want to, I mean, let's pull something out you didn't pull up. Go to Apple. I'm not making the days. You know, I didn't make the volume on that day. Bullish breakout, reversal, look down below volume, sit on top one bar, catch a breakout. Wait for the volume bar to show up at a reversal point, sit down below it, catch the reversal down. Now, I would love it to be 100%. There's no 100%. But you look at this time frame and you tell me, this is Apple, okay, one of the most popular companies on the planet, even in the mines of Africa, mines of China, when they're digging up all these parts. And I have an iPhone, not negative to it, right? They know who Apple is. You look to this chart. I give you homework. You have 3 days if you want to really test it. You pull up any chart, you pull up the parameters, you see exactly how this is laid out. And I don't care what chart you look at, you will see a 7 out of 10 times when it aligns as I showed you, the market breaks out. Now, how you trade it, be it stock outright, be it trading the option, is going to add the dynamics to it. Options have time. You have a huge time limiter, because you can't hold an option forever. It doesn't make sense to, right? Buying a stock outright, totally different. You can handle, the time is not a factor. It's how much money you can handle on a drawdown. But just go back to any chart of your choice. Go to your chart. You can give me any random chart right now. I'll show you breakout, the pattern align itself. You can see it here too. Reversal back down. Look at the volume. Okay, catch it below. Look at it fall. Every reversal. Oh, big volume. And the beauty of this is you don't need some $1 million software to find this. The moving average. Reversal point, crossing down, volume. Go to the last transition point. All right, here's the upswing. Hit volume, cross the back above, right? See low volume here, low volume here, low volume here, boom, hit volume, takes off. Go to the moment of the reversal where you see the candles break down below. If the volume's not there, see here's another example, right? If volume's not there yet, it is just a pattern, it's not momentum. See, whenever you pull up a chart and you see this, you see the red breakdown, see that's a pattern reversal. You need momentum. You need the momentum. So we don't have the momentum yet. But so this would not show up. This wouldn't show up in the aggressive bearish breakout because the volume did not meet the criteria. It would not show up. But if you happen to be looking at a chart and you look up and you see a reversal where the candles go below it and you see low volume, that is a pattern break. That is not a momentum pattern breakout. Two distinctly different things. So what happens is sometimes the market needs more momentum built. It needs more time to build up the sentiment. So here is the first time you had the momentum show. See the volume spike, 87, almost 10% spike. Doesn't look big here, okay? 87 million versus 80 million. 10% of 80 is 8 million, okay? So that's just underneath 10%. That is a larger than normal activity. This is when this would show up in your screener. This indicator down here, this is your volume indicator. This is volume. So catching the breakout. So what did we do? Okay, we would see this. If you're running aggressive bearish breakout, we would sit one tick below it. Catch the breakout. That'd be a pending entry. Just as I showed you before, we'll go back and pull up our previous support levels as targets. Okay, I'll have my stop loss up. Find the previous high, higher than the latest bar. There's my stop loss. See, I always love that when some of you probably seen the marketing. They'll compare their widget or their whatever to and try to bring down indicators. Say, oh, indicators are lagging. You know, you need a forward. You know, you need a forward analysis tool, a forecasting tool. I don't know how you can forecast the future without looking at data. You know, unless you got a crystal ball somewhere. So any form of analysis, if I'm researching a company, I'm looking at past performance. I'm looking at past performance, right? If I look at a P&L, that P&L is not in the minute. It's not in the moment. There's no live P&Ls that we have access to as shareholders. That's why there's a quarterly earnings statement, quarterly earnings announcement, right? That's in hindsight. Tomorrow we have non-farm payroll, big volatile event tomorrow at 8:30. You know what that data is from? That's December. That is now lagging because it's January 5th. All right, every piece of analysis, any piece of research, 99% of it is lagging. And lagging is past data. This is the exact pattern we just set up on Cisco. Exact pattern. There's profit target. You don't need to have anything else but a chart in front of you, and you can visually see it. The simple layout. It's a simple vertical look, and the screeners I give to all my clients allows you to pull them up, and you're able to just pull them up and go. And if it doesn't, if nothing checks the boxes, there's no, you don't have to trade, right?
You do not, once again, have to trade for the sake of trading. Just because you can doesn't mean you should. So ultimately, if you have an ability, if you want to learn to analyze, and because this is the backbone. So what I've explained today is the quintessential base of what I use across every marketplace. Okay, so this up top does not change. The only thing that may change is long-term trading. I use a different combination of moving averages, but it's the same concept of trend and momentum. Same here. The expansion comes in to trading counter trends, how to trade different styles of options with it, how to tailor your stock trades and trade dynamic stop loss profit target placement. So that way you're not ever really losing, you're just reinvesting in at other key price levels. So instead of drawing down and then ultimately losing, you're able to buy back in at different pricing, different hedging opportunities that exist. So if this process makes sense, the overall architecture, remember, we're looking for reversal points. That's the easiest way to start. I teach other methods, but the easiest place to start is the initial reversal point. If it makes sense to you that buying action and a high volume of buying action does in fact move the market, if you really want to dig into the data, go to Yahoo Finance. It's free. Pull up Apple. Download the last 12 months of daily trading activity, open, high, low, and close, and volume. Add up all the volume divided by how many days you pulled and get an average. Then go in and put the average, count how many days, how much movement there was on the days above average, how many days below average, and what the average percentage move was. And you will see, that's Apple, but that's on every stock that I've ever analyzed, and I've done it through thousands of stocks. When there is higher volume than average, you get higher percentage moves on those days. That is the simple arithmetic of how the market ticks. Nothing I've introduced today is counterintuitive to the market. It's against the market flow. It is a simplistic approach using automated formulaic trend lines, the relationship between them, the price against them, paired with volume. That's what momentum breakout trading is about. The rapid profit method is how we leverage the data around options, around profit targets, around stop losses. That combined on the money management side is the empowerment to it. Because initially, most people start off and they just follow the signals I send. I send fully detailed signals. There's nothing to guess about, full details of a trade. To give an idea of what you received, based on what I showed today, it's gonna make a lot of sense. But when you look at his ticket that I send out, and I send these out 3 times a week for this program. Everything to the trade is delivered to you. Text message, email, everything's delivered. You also have a tracking area so you can see all the trades. The tickets look just like this. So this is a trade from last year forward, but this is the detail of the trades. So on the right is the email. Here's the symbol we're trading. Okay, this is for Ford. Buy the long call. Okay, you're gonna know what to do. Am I buying a call, buying a put? Well, you're gonna buy the call. You're gonna know what strike price to select. You're gonna know what options to select. Expiration month. You're gonna know the strike price. You're gonna know the trigger, right? Remember the trigger is the go moment. So that's our pending entry. This is a buy. You're gonna know your stop loss. You're gonna know your profit target. You take that, you basically copy and paste it into your trading account, and you're done. When you start off, it'll probably take about 15 minutes to set up the trade. After about a week, 2 weeks, you'll be able to do it in less than a few minutes. Now, throughout that time, I have 2 live sessions, Monday nights at 7, Thursdays at noon. They're about 2 hours apiece. What we do in those rooms is we build a strategy, we build a plan of expectation. So we know which way the market's going for the next 2.5 days. So that way we know when red days are coming, when green days are coming. We then take that and then we apply that to finding trades in the session. We go through all the sectors. We look for breakout opportunities in specific niches and areas of the market. Because the whole goal of this is empowerment. And so I've got traders that use this method across all their trading, even their retirement accounts, because it is a simplistic approach across, and it's irrelevant to what the market is. As long as there's charts to it, as long as there's price and there's volume, then we can trade it with this method. The base is the same, the conditions change. So as the conditions change, then in the sessions, we are aware of them and we have strategies. I've already rolled out 3 or 4 different techniques of trading this method in different ways to take advantage of the current condition. When we get to the eventual recovery, which we will, that recovery is in a bullish market at that point. When that happens, this is the prime time to learn this, because that method is straightforward and you'll be in a beautiful place to take full advantage, because you're talking about 51. Remember the 51 results on the aggressive bearish? You'll see days where there's 200 trades, 200. And at that point, it's like shooting fish in a barrel. How many trades you take of those are going to be dependent on how much money you have available to trade, and follow strict equity management. That's going to come. But that does not mean you can't make money now in red days and green days. It's a choppy market right now. This strategy applies there too, even right now as we speak. So the evolution is, this is the nice bonus to have, the way I look at this. I love trading, so I send them out anyways. But to me, it's really, this program is for those that really are looking for an approach that they can apply simply, and they don't have to spend hours and hours and hours trading. You want to be in the market, you don't have the time to be in the market. Maybe you want to be in the market, but you're sick and tired of being in the market at the length of time and energy that you currently spend. So yes, this is simple, and that's the goal, but it's highly complex in nature of how it's put together. And that's why I always have these live sessions, so I can bolster up and ensure that you've got oversight, coaching, a place to ask questions, and so that I can make sure that you're on top of the market, right? That's the most important thing. So as promised, what you're going to see today is probably the most affordable yet underpriced and packed with value that you'll see in this industry, and that's on purpose. So this is not your typical trading service, because we give everything up front. There's nothing to guess about. There's nothing to worry about. If you get disconnected, great example, I was in North Carolina for the holidays for a week. No connection to the internet, no connection to cell phone. I couldn't even talk to anybody. But I had no worry, because every single one of my trades has a profit target, has a stop loss. I don't have to be checking my trades. They're protected at all times. I don't even look at my P&L. The only reason I look at P&L is because I teach it. But I don't even look at my own personal P&Ls until I get a notification of a stop loss or profit target. Because to me, that builds a bad habit of being emotionally attached to the P&L. I want to be objective. And if I place a trade, it's because I objectively made a decision. I don't want to manage it after the fact subjectively. But that's this method, and that's why it's different. This upfront nature does not put you in reliance upon me to babysit and hold your hand every step. It's done up front. So you have freedom from being glued to me. And I was in this question, that comment came up earlier, right? Oh, it's easy to do in hindsight. Yeah, I agree, it is. So if you're of that mindset, and I understand where people fall into that mindset, because you've heard people say, you've heard promises and promises, you've seen results and results and results, and yet you've yet to put that into your account. You've yet to realize what somebody shows you and actually is delivering to you. A lot of that is not intentional. A lot of that is due to the nature in how they run the signal service. For example, they say buy Apple. Come to this trading room and I'll tell you how to manage it. Come to this room and look to see when I tell you to get out. And so what happens is, now you have to change your lifestyle to now join a room to wait to know what to do. It's hard to match results that way, because if you can't make it and they say sell it and you don't hear about it for another day or two, you're way off. So that's why I love delivering everything up front. You can't change it. I already sent it to the universe. I sent it to the internet. It's in the world. At that point, you have everything in front of you. We win, we lose. But it's up front, and you set it up once, and the only time we ever have to adjust it is if I want to move the stop loss up to lock in profit. I'll tell you about it after the market. I don't do in the market updates. I do after the market. So you have 12 hours to 14 hours to update. The other scenario I'll update is if we come to expiration. We run out of steam, we're running out of time, then I'll send out an adjustment based on time, meaning expiration of the contract. Those are only two scenarios where I'll give an update, but they're done after market. So that way everyone has time, 12 to 14 hours, to go in and update your trade if you want to. Some people don't, but if you want to, I send it out to you. So you'll know in the first 30 days if this is for you or not. You'll know it. And if it's not, let us know. Send an email to our support@concordiafinancialexchange.com. We'll give you 100% of your money back, no questions asked. I've already run the gamut in my career with companies that have a laundry list of steps to complete to get your money back. It is a nightmare. It's not a pleasant place to be. I also appreciate that in the industry. So this is literally a no questions asked. We won't even email you back except with confirmation says, thank you, appreciate you giving us your time. We've processed your refund. That's our follow-up. We're not going to call you, badger you, and run you through it. So ultimately, this entire program is available for you. Email alerts, SMS, cloud tracker. So notifications, emails, SMS. Then we have a centralized place to track your trades. Full detail tracking. The day we sent it, the symbol, did we get into the trade? Was it a missed trade? Missed trade means we didn't hit the entry. Every trade is always visible. If we are in an open position, if we closed it, close have wins or losses. It's an active P&L. We have trade tickets. So the copy of the trade ticket I showed earlier is also in each line item of every single trade. Any notes I send out are also inside of the tracker, so you can go back and reference notes if you need to. Everything fully detailed, everything fully laid out. The process of finding the trades is simplistic because we put it all out in 3 formats. I always recommend that we jump into, and that you jump into, the tracker. You can access the tracker on your phone, tablets, laptops, mobile phones, wherever you are. Sign up for the text messages so that way you can get it right to your phone when needed. But that is the best place to find and see the full details of a trade. You'll have everything you need on your phone and the ticket itself, but to see any updates, the tracking P&L, all that good stuff, you want to be looking at the tracker as well. All you have to do is look at it. It's 3 times a week. So Sunday nights, Tuesday nights, Thursday nights. The trade tonight, you already got a sneak peek. That's not just a mock trade. I wouldn't go through it unless it checked all the boxes. So that trade's going out tonight. That'll be going out at 7 p.m. tonight to all of my subscribers of the program. So they're going to thank you for walking through it live. That's an actual process of running through it. You're going to have access to all that good stuff. So the entirety of the program, I'm going to pull you up some of these simple steps, and you're going to love the price. Because as I promised you starting off, we didn't mess around with the price. We provide a full-blown support system. Nothing's skipped out to get a low price. It's the method and how we support is where we're able to save on the overall overhead and then pass the savings on to you. So rapidprofitsmethod.com. If you want to write that down, keep that handy. That's the site with this special offer I'm going to give to you today. Now, with this sign up, it's a 1-year program. You're going to get everything I'm showing to you for an entire year, starting right now, January 5th. As a bonus, I'm going to give you access to my live training sessions twice a week. It's the Market Pro Live Club. My toolbox with all the different strategies, all the different checklists, all the different watch lists that we manage and run, all the different lessons, the 12 hours of lessons of the momentum strategy itself you're going to have access to. All of our archive webinars, we have hundreds of hours of archive webinars for you. You're going to also get a bonus of our Options Mastery Academy. So if you're unsure about options or if you want to increase your skill set in options, I'm going to give you a special bonus of our Mastery Academy for options. And then the 4th bonus is actually the most powerful for me is money management. How do we run through multiple stop losses? How do we run multiple profit targets? How do we mitigate risk? And how do we know when to take off profit and take advantage of the next entry? That's money management. And I think it's underutilized, undertaught, because most people make it boring. But to me, it's such an important piece of the puzzle. And that to me is a cornerstone of the rapid profit method, is how we manage our portfolio. So each session of the process is going to be bolstered and beefed up with options trading. Okay, I want to make sure you know how to read the option chain, what methods we use to pull the trigger, you know, how we use implied volatility. What I showed today is just a tip of the iceberg of what we go over, but I want to make sure you have a good base to build upon. How to set up contingent order types, all that good stuff. How to use the checklists. How to set up autopilot, right? We talked about pending entries. I just showed you one method. Okay, there's also multitudes of different ways to run order types and autopilot trades. So we're gonna make sure you've got all the best training around autopilot trading, right? How to set up your accounts, how to set up entries, exits, all done up front. All the checklists. This is 4. I've added 4 more because the market conditions change. So using the same base method, there's also 4 additional checklists also found in the empowerment toolbox, but these are my core 4. These 4 make up 80% of my trading. These 4 here, you're going to have those. You're also going to have the money management. Okay, so if you think about putting this live, this is the Market Pro Live Club. So you've got signals coming to you. You then have readable, touchable content, right? Consumable content. Then you also have live access to me twice a week live. This is today, exception, the intro and this part. This is for new students, new client orientation. That's what this is. Mondays at 7, Thursdays at 12. They're 2.5 days apart. There's 2.5 market days between each session. That is intentional. We have bookended the markets 2.5 day increments. We're always on the market. You'll know how well this works. If you don't take a single trade of mine, if you don't read any content that we give you, if you don't go through any of the videos, if you don't go through any piece except show up to my sessions, in the first 2 sessions, you'll be a believer. Because you'll see session 1, it's going to be Monday at 7. That'll be your first session with me. I'll give you a plan. I'll say, this is what we're going to expect in the market. Thursday comes, you're going to see what I talk about Monday come to fruition on Thursday. Then on Thursday, you're going to see me run through the game plan for the next 2.5 days. You come Monday, you're going to see what we talked about Thursday come into play Monday night. And that's the moment that the aha goes. You go, aha, okay, this is awesome. So if at a bare minimum, you show up to Monday, Thursday, so next week, you'll be a believer by Friday. If you don't do anything else but show up there. Because the patterns repeat themselves, and you're going to be amazed at that pattern repeating itself and being able to call it to the T. So as a special bonus, you're also going to receive these 3 massive reports. I say reports, but that's not even a better word. It's like a book. There's hundreds of pages in here. 39 investing secrets of the Titan value investors of our day. This is your Warren Buffett, Bill Ackman, Icon, to name a few. We extrapolated their best known and unknown secrets into one portfolio in this book. Amazing book, you'll love it. The second is the Titan Values Investors 100X rule. This is where you'll understand a formula in what these massive hedge fund traders leverage to find the next Tesla. Remember, Tesla was like $1, $2, $4, $5. They talk about that specifically. How do you find the next one? Well, there's a formula. That's what's uncovered in this 100X rule. And then, of course, the profit calculator, another money management lesson from the hedge fund traders themselves in the profit calculator. Special bonus. Many of you have never seen this before. So with all of those included, this entire program is $399 for the entire year. If you add up all the bonuses, those are prices we've sold those at. That's not, I know some of you probably come to an event, like, I'll just put that on there. No, we've actually sold those at that value, those individual pieces, over $8,000. For the entire year, everything I displayed, all the signals 3 times a week to you, all of the bonuses, all my live sessions for $3.99 for the entire year. I told you we have focused on making sure we have affordable pricing that's fair to our overhead. And so the reason we're able to offer this price is because we have hundreds of traders that follow this program. That allows us to pass the savings on to you. We don't have a sales team that's going to be on the phone calling you after this event today. That's intentional. We use partners like Investorexpo, wonderful, amazing people. Anna's amazing. If you've had a chance to speak with her, she's amazing. Whole team there is amazing. To partner with and to get our message out. And then you in the room are a huge component of our growth. Maybe not you now, but you in a week from now. Because when you see this, you tell your friends and family. That's how we're able to keep price where it is. Now, as a special bonus, we're kicking off the year. I'm going to reward those that know how to take action. I'm going to reward those that are willing to give me 30 days. Start the clock. Give me 30 days. If you take advantage of this now, and trust me for the next 30 days, give me an honest attempt, I'm going to save you $100 off this price. All you do is when you go to our checkout page, find the coupon code. I'll show you where it is. If you use the coupon code MAT100, type in the coupon code, you'll get everything I walked you through for $299 for the year. So for $299, you're getting email alerts, text alerts 3 times a week for the next 52 weeks. That's a potential 150 different signals. Sometimes there's more than one signal, okay? You're also going to be getting 2 weekly sessions live with me, 4 hours each week. So 4 hours each week, 52 weeks, that's 200 plus hours for $209 for the year. You're also getting 12 hours of pre-recorded content where I go over every component of the momentum breakout strategy. You'll have it as long as you have internet. You can log in to your membership area for just $299 for the first 10. After that, if you need time, that's fine. $399 is a phenomenal price already. So right now, go to rapidprofitsmethod.com. I'll be sticking here. I've got a team of people moderating the event with me. I've got Alan, I've got Linda, I've got Kim here, as well as the team with Investorexpo to answer any questions you have. So at this point, go to this website, they'll pop it into the question section so you can jump right to it. Rapid Profits, make sure it's plural. You'll see it now from Alan. It's right now in your question section. Click that link. It's going to take you here. I'll show you what it looks like. So once you click that link, it's a redirect. Okay, so it's going to redirect you to shorten link to this special offer. Remember, I started off saying you got 3 days. Right? I'm going to give you 3 days to think this through. So the first 10, you're going to save $100, $299 for the year. You'll keep that price as long as you're active. Next year, you want to stay with us, you're going to pay $299. The following year, 2024, you want to stick with us, $299. If you saw this 2 months ago and you didn't jump on it, you saw it lower. Price is going up. Okay, so lock this price right now for the next 12 months. I know you'll love it after the first week. Some of you may need more time, so that's why you have 30 days. In a week, that's 3 trades, that's 4 hours with me. You'll know within the first session if we get along, if the message I teach, if the way I teach is making sense. You'll know right away. So it does not take long. I already showed you the nuts and bolts today. There's nothing hidden, there's nothing behind the scenes that you haven't seen before. You'll see on Monday night at 7 o'clock in your first live session with me, exactly the same layout I used today. You'll see the exact same software I used today. You'll see the same watch list that I used today. The benefit is we can get right down to business and talk about how do we make money in the markets. As you scroll down, you can read the history of the program, how it was created. I actually came up with this on the beach with my family. You can read about it here if you'd like. But if you're ready, you want to be the first 10, jump to enroll. You've got 30 days. Add to cart. You're not checking out yet. You're just going to the cart. You'll see all of what we added here today for you. You'll see the price for $399. You'll see it's a secure site here. Okay, so it's all secure. Here's your bonuses, all the program details, your special announcement here I showed you, the investing secrets of the Titans, your Titans 100X rule, your profit calculator. Basic checkout, you got to create your account. That's what this does. So you can log in, billing address. Here's the coupon code. So right now, the total is $3.99. But before you check out, make sure you come into the coupon code and type in MAT100. Once you type it in, apply coupon code. Now you'll see this at $2.99 for the entire year. There's no hidden costs. This is exactly in what you will be paying for this program for the next year. On the checkout, there's 2 special offers. If you want, you can add these to your order. It's not required. You can add them if you like. Options Profit Generator is a daily signal service. Rapid Profit Method, 3 times a week. Options Profit Generator is specific low-cost options. Rapid Profit Method, you have some option trades, you'll have stock scenarios. 3 times a week's the core number. If you want to add it on, this is also in the 30-day guarantee. You don't have to continue with it if you don't want to. It's month to month. It's normally sold up front. You can do it month to month on this special offer only. Below that, we've got more reports if you like reading, if you like content to go through and to review. The Titan Value Investors 4 B's checklist is a phenomenal check. It's not like my 1-page checklist. It's like 8-9 pages. It's an amazing investor focus, right? So what I'm talking about today is swing trading, days and weeks in positions. And Titan investors, the hedge funds, are talking about weeks and months and quarters and years. So they have a specific formula that they employ. Most of the people I work with, traders like yourselves, swing trade. They also have portfolio designations for long-term investments. They have a portion of their portfolios for dividends, for income generation. We talk about different ways to use covered calls for generating income on assets owned, right? Almost like a rental property, okay? So this is for those, this special bonus is not for those that are scalping, right? If you want to really talk about expanding your portfolio, try to think at a higher level, like a hedge fund trader, that's what you would want. Add that on here. Everything is under the 30-day guarantee. So if you add everything on here and you're not happy after 30 days, you'll be able to get it all back, okay? So if you added all the bonuses up, it's $387, all the additional orders. So you're still, this is less than the average transaction that you make in the market in one trade. $387 is the investment. I know you've seen offers very similar to mine with signals, education, live sessions for thousands of dollars. This is a real price, and this is intentional. Remember, I left in 2018 from a large corporation, did over $150 million in revenue, and I wanted to do things different. The number one thing I wanted to do was to provide affordable and reasonable pricing to empower. That's why we're able to do this, because we, from a business standpoint, we have intentionally focused on where we invest in overhead to provide you, the client, the best experience. And that's one of the biggest expenses, if you don't know about a corporation, is people. Where's the biggest number of people in the revenue focused business? Well, it's in sales. Our sales are done in an event like this. We partner up with great people, once again, with Investorexpo. So we don't have this huge marketing budget that we have to then overcome and cover by high price education. We want to do that. That's why we're able to offer this once again. So this sounds counterintuitive to the price that you've seen before. That's fine. Give me 30 days and I'll show you that this is worth the thousands of dollars that you've seen and more. There's no risk in 30 days, and we have the best affordable pricing you'll see. But I will say this price will not be here at this price level past this 3-day mark. This is an open enrollment period. We only have so many of these throughout the year. The reason is simple. When you come into the Market Pro Life Club, I like to have a starting point. I want to have clients that come in at a similar time, so I know I've got my batch of experienced traders in the room, and then they all know as well that we're going to start from the ground one and we're going to build our basics back up again. So we go through this cyclical cycle where we run through the strategies, we go over market, and then we do it again. And over the course of a year, you're going to go through that method 4 times to 5 times. And at that point, you're going to be amazed at your transition. Your mental mindset shifts. I go over a total mental approach as well. So it's not just objective. This is a trend line. This is a certain support resistance level we're going to trade. we go into how do we psychologically manage through our trading. I've been doing this a very long time, and it's been exponential on the learning side because I've worked with thousands and thousands of traders. Remember, as a chief revenue officer, I was also responsible for customer service, being responsible for making sure clients are satisfied. So with that, I had access to hundreds and hundreds, if not thousands of tickets, right? So when you go to support, we have the same type of ticketing system, right? You go to our support dashboard, you fill out a ticket, then our support agents follow up with you. So we have the data, we know exactly where the pitfalls are. So I learned so much about the experience individually as a trader. And then you imagine now having a water hose of thousands of clients. And what I found is that there's really just 3 or 4 areas, 3 to 4 areas that were obstacles for traders' success. First thing is trend direction. You'd buy and the market would go against you. You'd sell, the market would go up. Okay, that's the number one pain point that I found over thousands and thousands of data points, was getting direction right. The second was, I mentioned earlier, was how do you manage the trade that you're in, right? There's what to trade, when to trade, how to trade. How do you manage the trade? The how to manage it, the money management side, was the second biggest obstacle traders face. Many in this room are sitting there, and I know because I've seen this happen in my live events, in-person events. I see you nodding your head. Even unintentionally now, I'm not looking at you, but I can feel exactly what you're going through in your mind. You've been there. And I appreciate it. I've been there too, being on the wrong side. As you saw today, the way I roll the strategy overcomes that, right? It's there designed to give us multiple data points on trend. The momentum boost of volume is there to find the crucial pivot point of explosion of price. How we pick stop losses, how we pick profit targets is there to answer the second biggest issue traders face is money management. The third is the mental aspect, emotionally managing trades. How we overcome that is by objectively setting trades up front. Okay. Emotional decision making. As I said earlier, I do not monitor my P&L on my live accounts. The only reason I have a P&L on my mind is because I have to track the trades. I have to teach the trades, right? People have questions. Hey, we lost this. Hey, what happened? Okay, let's go look at it. This is what happened. That is the emotional fortitude, right? Having a more emotional fortitude, turning off your emotions to money. You see, the market doesn't care what day it is. Price goes up, irrelevant if it's a Friday or Monday. Doesn't care. Doesn't care how many days it's been. The market doesn't care it's January 5th. So I don't even look at them. I don't look at, the only reason I have a P&L tracker is because I provide a tracker. But I don't go in and look back at past trades. I turn off losers. If I lose, I lose. I turn it off. I don't go back and look at it. I literally tell the clients, I said, this is how I handle a losing trade. I get the question, because we lose trades too. I go to the watch list, you know what I do? I delete it from the watch list. So I'm not intentionally beating myself up. We have more conversations. The number one person we have conversations with in our lives, by far, it's not our mother, it's not our father, it's not our wife, it's not our kids. It's ourselves. We talk to ourselves more than anyone else. Somewhere along our DNA track, we became our own worst critics. We beat ourselves up more than anyone else in our lives will beat us up. I'm also a victim of that. So what I've done is I teach others how to turn off that negativity. The simplest way to turn off negativity, right? When you lose, nobody likes to lose. But losing is part of winning. You have to lose to win. Ultimately, the more percentage gains that you make is the most important number, how much you make, not how many trades you win or lose. So subjectively, if I turn off my visual aid to the loss, meaning I don't look at that chart ever again, I'm not gonna go, especially if I'm in your shoes, I have to teach it, right? But if I'm in your shoes and I lose a trade, I won't look at that trade again unless it shows up in my list. in my filter, in my stock screener. That's why, as you saw me pull up trades and I was looking at the list and I was pulling them up, you saw analysis, prior analysis, because it showed up before. If there was a loss, I don't sit there and stare at it, because that's going to put myself in a negative state of mind. I'm going to critique myself. I showed you on several charts. You don't need to have a degree in rocket science to go back and find when a trade triggered. You had the formula in front of you. Go back and look at it. You can go back historically on any chart of your choice. Go look at the reversals. Go look at it. That's where belief is born. Belief is born from seeing it happen. I can't fast forward the future. Can't fast forward it for you. The past is not indicative of the future, right? So all I can do is go off the data I have, because the data that we have today that we use is founded upon the data that already happened. That's the essence of analysis. That's how you forecast. How do you forecast? If somebody walked up to you and say, where's the market going? You could say up or down. And if you really wanted to build a forecast, you'd say, okay, well, show me what's happened recently. Okay, show me a little bit further back. How else would you know? You wouldn't know. You would just be guessing. So the more data points we can leverage of the past, the more probabilities we have on our side. But there's no 100%, right? There's a 0%, there's a 100%. There's no 0%, there's no 100%. Our world is lived in between those goal lines. There's no 0%, there's no 100%. How we live in between those lines is heavily driven by how we speak to ourselves. And so that is the third biggest thing that I see is the mental aspect. So we are optimistic in the room. I intentionally have to be balanced, because I tend to be more optimistic than pessimistic by far. I'm very rarely pessimistic. No one's perfect. But ultimately, through objectiveness, we try to remove ourselves from the emotional P&L decision making. As I stated earlier, for $299 for the year for those first 10, I already got word, we already hit the 10. As long as this room is open, we'll honor the first 10. So I'll leave the room open for another 10 minutes. So if you weren't fast enough on the first 10, that's okay. I don't want to. Some people are faster on the computer. It's a large room, and I already got word from Alan that new clients are signing up. So we hit the 10 already. I will say this, if you're a little slower on the trigger, that's fine. We'll leave this open as long as this room is open, the first 10. If you need more time, that's fine. You've got 3 days. We'll send out a recording. If you want to watch it back, you can fast forward it, rewind it, whatever you want to do, please do so. $100 difference to me definitely makes a difference, okay? Because once again, my goal is to try to offset any overhead you have. I can't, I'd love to do it for free. If you look at other products and programs in the industry, it's basically free to them, the price. 4 hours a week, it's a lot of time. Making sure we get the trades managed, sent out, right? So I think it's adequate. And once again, it's because you in the room that are signing up makes this happen. We've got hundreds of traders in the rooms. So I definitely am honored by that opportunity to work alongside of you. I always love the aha moments. We've got a great room. So if there's any questions about brokers that I'm not familiar with, I just simply ask the room and I get 5 or 6 responses. We got a great room, great community, all think alike to the mindset wise. Stay positive. We encourage each other. We've got fun nicknames for each other. It always starts with a city or state name, like Portland Mike. We got Aussie Mike down in Australia. We got California Claude. He was there earlier with us. But we have a goal, right? We have a goal to take advantage of the financial markets in a simplistic, repeatable way. So I'm excited to have the new clients joining the room. If you're signing up, let me know. I want to keep my eye on you, so when I see you in class on Monday night, I can give you a special shout out. In the first room, in the first session you attend, I'll go through the synopsis with you, so you'll know exactly what to expect in the room. So you you're going to be you'll be well welcomed. Everybody knows when I have new client orientation that we're going to get a rush of new people, and they like it because they can go back and start from the beginning again. And we build upon it, build upon it, build upon it. It's amazing. I've got traders in there for years, and they still love going back to the concepts again. Hey, Matt, show me that again. Even though I'm like, Bill, you've been with me for 2 years, but it's all about repetition. It's all about seeing it again, making sure you see the flow. But that's the benefit of the live, and that's why that's my favorite piece of this overall is being able to work with you in the market, right? In the moment, that's most important. Not a month ago, not 2 months ago, not 6 months ago, but in the moment when it's needed most is to provide clarity. Expectation is, you're going to hear me use that word over and over again. If you have an expectation that tomorrow is going to be a red day, when the red day happens tomorrow, your emotional state is totally different. You already know going into it to expect the red. It may not seem powerful, but it is powerful. Think about it. If I say the next 2 days, you're going to see the price go up. After that, you're going to see it go back down again. You're now not in a false sense of optimism. You're already expecting a retracement up. So you don't get over enthusiastic and start buying in too early. And then we're going to meet again. That's 2.5 day cadence. We're on daily charts. So Monday night, you have all day Tuesday, all day Wednesday. You're going to have an expectation of what to see in the market, and even the first half of Thursday. I literally draw it on the charts. I have arrows, and I say, look, this is what we're going to look for. And then Thursday at the noon session, I had it earlier today. You can go watch the recording when you log into your membership site. You'll see us talk about what we talked about Monday, and you'll see exactly that we said Monday carried out over the last 2.5 days. What we talk about today, you're going to see take place all the way through tomorrow and Monday, and we're back again Monday night. So now you're not emotionally attached to red and green. You're not off guard. You're not in a shock and awe. I want to remove shock and awe. When you pull up your account, go, oh my gosh, what happened? What's going on in the market? Why is the market selling off? Or hey, why is the market going crazy today? Why are there so many buyers? Why? It's not happenstance. It's not luck. There are anomalies that happen. There's no absolutes. But with a high degree of proficiency, you'll be able to see how we're calling in expectations. That's how you remove the emotion in anything. Expectations. You know, I always think about any interaction where I've had an argument. Many of you probably experienced this, right? You've been caught off guard by something. You know, maybe your boss called you in the office. You thought you were doing wonderful. You thought you were doing amazing for the company. And you get a call in the office, say, hey, Matthew, I got to sit you down for a second. And you're like, what's going on? And you have an expectation of Y, but then Z happens. That's not a comfortable place to be. But if you knew going into the office, if your boss said, hey, Matt, you know, you've been doing great in this area, but I want to talk to you about this. So can you stop by my office after lunch? I'm going into that meeting knowing that, hey, he's giving me some accolades, but hey, I got some areas to work on. Okay, you're going in there with a different mindset. That's a small shift, but that's a big shift mentally. So if I sum up trading, to me, it's weathering storms. If you can have the expectation, if you can have the knowledge and the empowerment to weather storms, then you'll be successful in this market. Most people that are unsuccessful in the market is because you can't get out of your own way. And now a lot of that is due to the mental impact. Remember, we are our worst critic. So we have to enforce ourselves and build habits to manage the psyche, manage our psychological state. We've got to change ourselves from beating ourselves up to giving ourselves a break. And that's why I find objectiveness, math is math, right? 1 + 1 is 2, 2 + 2 is 4. The more we can lend ourselves and lean ourselves towards objectivity, the less subjectiveness we can beat ourselves up upon. Because you can't argue 2 + 2 is 4. As I said earlier today, I talked about my children. I have an 8 and 9-year-old, and they just got rid of the core. I don't know what you call it, core philosophy. I don't know how they teach math in Florida. Got rid of the core method. That's what it's called, the method, core method, which is night and day from how you and I learned it. It's a different way, but you get the same answer, right? They may come up with a different way to go 2 + 2 is 4, but they still get 4. They're doing fractions. My daughter, she's the older one, she's in 4th grade. They're doing fractions, and they do a totally different way than I did fractions. The Common Core. Yeah, thank you, Alan. Alan's the man. Common Core. And they do it a totally different way, but they still get the same answer. And that's what I find is amazing. The math will always get you the same answer. How you get to the answer is going to be different. You can make it the most complex, and I believe Common Core is more complex, but that's probably why Florida changed it, the state of Florida. But ultimately, I believe in the simplest way to get there. I don't want you to spend months learning this. It's not going to take you months. This is designed to not take months and months and months to figure out. This is not. Appreciate it, Lee's. Looking forward to working with you, or Philip, excuse me. Yeah, I'm excited to have you on board. But that's just my overall method. Maybe it's because my children, maybe because I coach so many people. I just learned, hey, there's 50 analogies to explain one thing. Sometimes you need to pull out all the different tricks out of your bag of tricks to explain a concept. The only way you get that many ways to explain a concept is through the practice and the habit of teaching it. That's why I love teaching. I love teaching. I love coaching trading, because the more I teach, the stronger I become. And then I'm able to then give it back at a higher level, right? It's a law of reciprocity that the more I teach, the more I work with, the more people I interact with, the more I learn, and the better I can teach and coach. And I'm always learning, right? And I'm learning because my clients, you all in the room, force me and put it on me to learn so I can better teach, right? So that's why I can't see myself walking away from this industry, because I love trading, but trading by yourself is boring. Trading by yourself is lonely. I tried it for about 6 months after I left the company in my mini retirement, and it's just boring. It wasn't as exciting. So being a part of the community, to me, makes it enjoyable. I always have a place to go to, if it's for high fives, popping champagne, or if it's shoulder to lean on. That's the method I'm up for. I'm up for it all. But $3.99 a year, that's less than one trade that you place. The average person I work with averages about $2,000 a trade. One trade. You can win that, you can lose that. For $3.99, you're going to get all of the support, all of this interaction, all this education, all this content for the next year. The beauty of this is one winning trade will wipe out this cost and be profitable. One trade. So 30 days, give me that opportunity. I promise you'll love it. At this point, I'm about to lose my voice. This is hitting my benchmark limit. So at this point, I'm going to leave the room open in case you have questions on the checkout page. I see some of you still on the checkout page. That's fine. My team will be here to check any questions. If you have any questions, I'm going to pull up the support line. So if you have any, you can just text or call or write an email. It is, let's pull it up for you. Alan, if you can give me the phone number, I'll put it up here for everybody. For some reason, it jumped off this screen for me. But if we have, I got our support email, I'll pop it up for us. I had to restart my computer and some of my stuff did not transfer over. So support, I'll put it up for us. And then I'll put the number up here for you too, if you want to write it down. And you can text or call this number, whatever's easier. Yeah, I'm going to pull it up right now for you. All right, there's our customer service number. I'll make it bigger. There we go. Okay, you can email us. It's probably faster if you just text or call. 407-498-6508. All right, perfect. So, all right, so we are all good here. I'm going to leave this up. Like I said, my team will be here, so if you have any questions, feel free to type them in. The team's done a wonderful job. I see them responding to everything, so I do appreciate Alan, Kim, and Linda helping out, as well as Investorexpos. And I've worked with you a long time. Definitely excited to be with you. So appreciate you all. Happy trading, and I will see you Monday at 7 p.m. Eastern time. Thank you all.